Check 1, 2. Morning, Hip Tap. How are you? Can't see it. Dude, this like new Twitter thing is fucking the fuck out of me. Weird. Got missing chat here. And Q's. Good morning out there. How y'all doing? Turn that off. Get right into it right away. All right. Give me 1 second here. I just have some technical stuff I have to do in the background. Good morning to you all if you're joining us right now. Q. Decision. Dude. Second here. Yeah. Tweet that right now. Send that. Sorry, I just got some technical stuff I got to do here in the background. There's a rug pull going on. And we're going to talk about that too. Tweet that right there. Paste that right there. Yeah, it's kind of funny. I'm this morning I've been burning the midnight oil here. So I'm live streaming during the day, and then I'm working until I don't know. By the time I'm actually done, 2, 3 in the morning, I think. So I said I would be late this morning, and I'm glad I did. So let me switch over here right now. As I had meetings until quite late last night. It's a 5-minute chart right now. And then after my meetings, I've been working on, hang tight here, just one more thing you got to do. Almost forgot. Sort by newest. Customization. Members. Save that. All right. So just a moment here. I got some technical stuff I'm doing in the background here. It'll be just a moment. Get some calls. I'm going to say no to those right now. We're going to talk about that too. We got a bunch of stuff to go over this morning. We got a bunch of stuff to get through on the. We have a bunch of stuff we have to get through heading into this rate decision. So we're going to do this rapid fire. I am bearish here, just so you know. We're going to talk about my bearishness into this rate decision too. We'll lead up to that, and we're just chatting. So let's start baseline. I'm kind of happy here. Like I'm very impressed because we kind of charted. We kind of like 6 sessions ago charted all this out, and I'm quite impressed right now that we have followed that trend. 1, 2, 3, 4, 5, 6. Now, I did start a position yesterday. I was a little pissed off. I started a call position yesterday in the bell down here. Watch my cursor right here. So right down here, I bought some calls on this down spike for today. Now, there's 2 things on this. I bought some calls down there, and I was fucking livid into 415. The price of those calls did not change. Now, I knew better, and I should not have bought calls down here because right there I bought them, like right at the bottom. And should not have bought them because when we came back up, those calls did not budge in price. And we saw that all day long yesterday, right? There really wasn't a ton of payout on calls. I was so frustrated yesterday. I looked at all of my trades yesterday, and I was so frustrated after the close yesterday because the implication that we have range expansion means a couple things. It means you have to stay long all fucking day long, and you have to go up 100 fucking points to get paid. And it's a function of dealers basically saying go fuck yourself, not getting that expansion of the implied range and that premium repricing, all that kind of stuff. It made me not want to play today. That's how much it fucking angered me into the close yesterday, because I was just like, I don't really want to trade this if this is how it's going to go. Now, normally we don't have a lot of range expansion on these dates. The implied moves are usually like here and here. And because they're higher and lower, dealers are just like, well, we're not going to pay you for a 100-point move or 200-point move. We don't care. We're not going to pay you. You have to, like, hold this and play the game. And I'm like, why am I playing this game this late into the close yesterday when I already know that I have to hold for giant moves just to print? We saw it yesterday that like we'd move 2-3 bars up and I'd get a penny, and I'm like, I'm like, this is bullshit, So when we're in these events, I'm like, what am I doing? And I had 10 trades yesterday. I thought I had 8 winners and 1 loss at the end. I had 10 trades. I had 1 loser in the morning for I think 3 or 4 pennies. I can go back and look. And then I had 1 loser at the end of the day. But even after 8 winning trades and 2 losses that I had stops on, it was a good day, but it wasn't a great fucking day. And you can't have 8 out of 10 winners and not walk away rich. So the implication here, for me at least, is that this event is rigged to me to some extent. If I have 8 winning trades, I better fucking be up a ton, and 8 out of 10 I should be doing very well. So it's already showing that even with the range expansion expectation, that you pretty much have to fucking hold until the end, right, and ride the casino. So normally I tell people don't bother trading this. What's really nice about this, too, is if your implied move is here, let's say, as an example, and here, and you actually trade out of that range, you get paid some big fucking money. And so I don't know how much I'm going to play this today. I'm going to start with that. I might play this. I still have those calls on this morning. So if they print, they print. And then the other thing that I noticed last night at late night was that 6 o'clock scam candle on NASDAQ, which, I'm sure people say that. I disagree with that, but you can't move the market that much, that easily, unless you control the market, in my view. So I made that post late last night, I think, like 1, 2 in the morning. I'm not sure. So that's out of the way there, okay? The other thing that I did last night was, we'll talk about this later. I've been working on refining the tool. And so the tool is changing. It's changed about 20 to 30% from what it was. So I've been testing it. And last night I spent a lot of time back testing into 2, 3 o'clock in the morning. And not surprisingly, I turned bearish last night. Not surprisingly. The improvements that I'm making this tool are telling me to be bearish today. And I was actually kind of bullish heading into today. Even if I thought we'd come into today and kind of do this like bloodbath down, then a move higher, I'm kind of going against this right now. So we're going to talk about that too. We're going to talk about a difference of opinion that I have, and even if we do go up here today, I don't know that I would take the trade. So the improvement to this tool is telling me not to trade this too. So that's second strike against trading today. Is the tool's like, well, even if we do go up, you're not validated to take the trade. So we'll look at that as the day goes on. At some point, I'll show it to you. I don't know if I'm going to show it to you today. I may or may not show it to you today. But it's fascinating because you can lose a lot of money in this trade today. So just a little bit of changes today to talk about as the morning and the afternoon moves forward. So the tool is telling me to be bearish right now. Well, not bearish, not necessarily bearish, to not be bullish right now. So we're going to go over a bunch of stuff this morning we have to talk about. We will see. Let me check a 30-minute chart here. Yeah, this 30-minute chart's telling me not to be bullish, not to, hey, buy this dip. Now that could change if price gets above. So I want to make that note as well. So let's say price gets above here. There's a 5-minute chart. If price were to come higher, I would invalidate my bearishness, and we would go up here, and I would take that trade. But without seeing this right here, without seeing price above and across, my new tool is telling, the same tool just improved, is telling me do not take calls here right now. So just a heads up to you out there. If you're bullish here, whatever you might be thinking about, I am not at this point bullish. There's a 1-minute chart right here. We'll take a look at the hourly trigger and see where that is. You can see it rolling over currently right now. Trading down into S1, a 1-minute chart. So we'll take a look at all this stuff right now. Hold on 1 second here. And there goes the blood right there. I'm actually kind of happy that that's happening right now. Hold on 1 second here. I've been working on this thing for like a week now, and I'm kind of happy that's happening right now because it's telling me no. So here you go. Here's the hourly trigger right here. Three trigger cluster here as well on the hourly trigger, the 1 and the 5-minute. And then we're gonna look at an implied move for today, and we're also gonna map out an implied move. See what the options market is saying. The move is today. In just one moment here. 456.46. And that was another note about yesterday was that this is what SPY has priced into the market for today. So the market's pretty fucking bearish today, right? Text right here. Leave that over there. We took that out. We don't need to know about that anymore. We don't need to know about that anymore. We don't need this anymore. Don't need that. Took all those out yesterday. Got this low right here. That low right there. One right there. That one right there. Mission accomplished and all that stuff right there. And we got one more right down here. Is that low? The implied move to the downside today. $451.88. It's actually tightened up today. 451.88 right down here. Right there. So here's your implied move for today. Can I copy that now? Close that down. I shouldn't say expected move is the correct term. So I just want you to be aware of the expected move for today, or the expected moves for today. Right down in there. Leave that up there. Leave that down there. There. So we're going to talk about what to expect today in the Fed rate decision. So the expected move to the downside is outside of the implied vol, like the 0-8 options stuff that was recorded this morning. The expected move is down here to 451.87. This is not expected down here, 444.60, for a bloodbath in the marketplace. We're going to review what to expect today. It's a 5-minute chart we're still on. Look at that. Almost perfect fucking moves down here. Fucking almost perfect. I got to say, man, this thing is like, we have like 6 straight sessions. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6 sessions. Almost exact. It's kind of wild. We're a little bit out of bounds on the top side here yesterday, but otherwise, fucking shit as close as, it's like hand grenades and horseshoes. Good enough right there. Pretty good. So impressed as to where we've gone so far. Now, for the bulls, up here you've got your top, a new high here. You've got a cup and handle. We all know, though, that traditional stuff can fail, right? We all know that. We can always get a dip down here, and then you get your move to the upside. We're going to talk about this today as well. The Open Market Committee. It's kind of important what exactly is said today. I saw what Nick Timmeros had to say on Twitter, so we will. Let me put that down here. Just get rid of this fucking thing. Or I'll just leave that there. Hold on one second here. One right there, one right there. Yeah, we're fine. That's good. We're going to look at previous, the June meeting and see what the June meeting held. We're going to look at the Fed minutes. I guess we'll extend that down there. 11:09. Sometimes the hedge comes off at 11:30, 1:30 in the afternoon, heading into the Fed minutes. So we're going to talk about that too. We're going to go over what Timmeros had to say. He's considered the Fed's mouthpiece. And I'm going to give you a quick preview for today. So the Fed is widely expected on Wednesday to approve what would be the 11th interest rate increase since March 2022, taking the benchmark borrowing rate to its highest level since early 2001. More importantly, will be whether the Open Market Committee officials feel they have gone far enough. Hiking more from here carries risk to an economy that many think is heading for at least a mild recession. So at least there's some change in, we're going to have a recession, we're going to have a depression, to a mild, quote unquote, mild recession. And the more hiking that we do, or the Fed does, the more risk to damage to the economy, actual damage. And that balancing act that the Fed plays in trying to reach dual mandates, right? We know that the Fed is trying to maximize employment. At the same time, they're trying to destroy jobs. Despite an improving inflation picture, the Federal Reserve is expected on Wednesday to approve what would be the 11th interest rate increase since March 2022. Investors are hoping that it will be the last one for a long time, and we've discussed that this week. Do we get a pause, or the talk the last time was pause and data dependent and in the future. Now, Timmeros came out the last rate decision meeting and said, hey, we've got a change in tone. And at that time, he was like, we're going to expect the next meeting to get a pause, not data dependent, an actual pause. You remember when Fed Chair Powell was speaking in the presser, he was a little bit more hawkish in his tone than what the press release stated. Investors are hoping that it'll be the last one for a long time. Markets are pricing in an absolute certainty that the Fed will approve a 0.25 percentage point hike that will take its benchmark borrowing rate. Mute this right here. We don't need to listen to that right now. To raise the benchmark target rate to 5.25 to 5.5%. That would push the upper boundary of the federal funds rate to its highest level since 2001. More pressing matter will be whether the Open Market Committee officials feel they've gone far enough, or if there is still more work to do in the fight against pernicious inflation. The signal will probably be, yes, we're hiking, but then we think we can sit here for a while and see. That comes from Kathy Jones, chief fixed income strategist at Charles Schwab. But, quote, no promises. We can't give up the option. And that is a needle to thread. If you're a bull out there, your kind of like sweet spot here today is going to be a pause, so a 25 BPS, a pause, and some kind of threat Let me rephrase that. A pause that's sustained for a known amount of time, let's say 3 months or longer, and some kind of like threat that there'll be a possibility of, let's say, one more rate hike, at least one more rate hike down the road. And as long as that threat stays there, it doesn't open up the Pandora's box to the market to front run an easing of rates within the next 3 months. That would put an end, in my view, put an end to the bull run, basically. If at any point the market thinks that there'll never be another rate increase and that we actually should anticipate rate cuts at some point 2 months down the road, you would see a front running of rate cuts, and that would mean a down move in the marketplace. So bulls is a hard thing, not a hard, but if you can't grasp that concept, you still want the threat of possible rate hikes down the road, even if they're going to cut. You want the threat there. You want that threat to be believed. Indeed, the Fed's course is far less certain. Central bank policymakers almost unanimously believe inflation is too high, but hiking more from here carries risks to an economy that many think is heading for at least a mild recession. The Fed should be done. Jones is part of a growing market chorus that thinks the central bank has gone far enough. Now, that's a different argument, right? Whether people believe the Fed has gone long enough or not is not. There's two arguments here. As long as you believe that it's going to stay higher for longer, even if it's just where it's at right now, versus, hey, we're done, let's party. They're two different concepts here. So Jones is part of a growing market chorus that thinks the central bank has gone far enough, with the annual inflation rate declining to 3% in June. It was 9.1% a year ago. The danger is growing that the Fed could unnecessarily push the economy into contraction. Quote, the Fed should be done already, Jones said. They're walking a difficult line. Here, to me, the decision would be, hey, we've done enough for now and we can't wait and see. But apparently the folks at the Fed think they need one more at least. Now, I think the Fed needs one or two minimum. Personally, I think they need at least this one and probably one more down the road, sometime in the fall, or even what a great time to do it would be in late winter. In fact, Fed officials indicated strongly at their last meeting, the first one during the tightening cycle, that they didn't see a rate increase, that they see at least two more hikes this year. Now, that's coming from the Fed minutes. And I do want to be clear here. Something that you need to be able to parse is that there's three different things here. There's the press release. There is the presser from the Fed chair. And then there's the minutes. And news organizations love to muddle the message from the Fed using all three of these sources. I tend to separate all three and put different weightings behind the three outside of the reporting organizations out there. The most important one to you today is the press release. That's an important one. The presser is more of like a ringleader, right, for what to expect today in the stock market. The press release is the message from the Fed. The Fed minutes is like the ringleader going into the back room, and there's a bunch of, there's clowns back there. There's, people that feel like they get their say there, but it really isn't the Fed minutes, to me at least. It doesn't mean shit to me. I mean, to me, it really doesn't. What really matters to me is the press release. Since that meeting, policymakers have done little to dispel the likelihood of higher rates. Now, I don't mind the little Fed presidents having their say, but it isn't in stone. These Fed minutes are not in stone. They're not policy. I don't mind them saying what they want to say either, and I think Jerome Powell has made that clear as well. Like that, like, these little chairs can say whatever the fuck they want. I don't care. Because at the end of the day, what he says is what goes. We actually have reports of people in the past, very smart people that work for the Fed, that are like, yeah, it comes down to like 3 or 4 egos deciding what happens. That's actually been written in books. Like, we have scientists working on this, and it's literally like 3 people and their egos off the cuff making a decision because they feel like this is the right thing to do. I kid you not. Since that meeting, policymakers have done little to dispel the likelihood of higher rates. And that's a key point, though. You want the threat of more rates down the road, whether we get them or not. If you're a bull, you do. I know that you don't believe that, but you actually do want that threat in front of you. And you probably do want rates higher for longer as well if you're a bull. I know you think you want I think you think you want QE, and I think you want rate cuts, but you really don't. Markets, though, haven't seemed to mind. Wall Street has been in a tear all year, with the DJIA jumping more than 5% over the past month alone. That could be because traders are ignoring the Fed's rhetoric and pricing in just a 35% probability of another hike before the end of the year. I do want to make another note to you. The traders betting on whether we get rate hikes or not it means nothing. It's garbage. I don't know why news organizations report that stuff. It's just a bunch of gamblers trying to make money, believe it or not. That's according to CME Group's FedWatch gauge of futures market pricing. One key note from the meeting will be whether Fed Chair Powell indicates that at least the FOMC will again skip a hike at its next meeting in September, while it analyzes the impact the previous increases have had on the economy. Now they're saying one more meeting. I'm hoping for 3, believe it or not, like 3 months. I guess the September is what is that? 2 months. So in July we got August, September. So yeah, I'll make that concession there. September sounds good. While it analyzes the impact of the previous increases have had on the economy, Powell has said the Fed is not locked into an every other meeting pattern of hikes, but he has indicated that a slower pace of hikes is likely. He has said that. Quote, the hike that's going to happen Wednesday is unnecessary, and probably the last couple were unnecessary, said Luke Tilley, chief economist at Wilmington Trust Investment Advisors. By the time we get to November, they'll be even clearer. Fed policy, though, has been informed by a belief that when it comes to fighting inflation, it's better to do too much than too little. That's the hammer on the nail concept, right? The current bout of price increases was the most severe in the U.S. That the U.S. and many developed nations has had to face since the early 1980s. The last period is also behind a lot of the Fed thinking, with a particular focus on how policymakers then backed off the inflation fight too soon and ended up having an even worse problem. Quote, it's easy for me to say that I think they're going too much, Tilley said, but I'm also quick to say that if I was in their seats, I might be doing the same thing, because they really are playing a game of risk management. The game is familiar by now. Retreating from the inflation fight soon could lead to a repeat of the 1970s, early 1980s stagflation of high prices and weak growth, while going too far risks tipping the country into a recession. Recent indicators are showing that credit conditions are tightening significantly, with higher interest rates and tougher lending standards substantial headwinds to future growth. Quote, recently softer core inflation will be welcomed by Powell, but he is likely to want several more months of softer inflation data before confidently terminating the hiking cycle. Citigroup economist Andrew Hollenhorst said in a client note, in our view, the U.S. economy is not headed toward a soft landing. After a summer of projected softer core inflation data, we see upside inflation risks reemerging in the fall. I think that's kind of funny. That he says that, right? You can see that the stock market has outperformed since October. We actually pretty much had a bottom in May, June. We had a great dip by as well in October, and then December, March, We're coming up to take a peek at all-time highs, right? We're likely to fail those all-time highs or slightly break above and then have a beautiful pullback in the market. So I think the entire market, entire sentiment is looking forward to that. We'll discuss that at some point if you want. And historical examples of that. I want you to realize that outside of this 5-minute chart here, there is a general sentiment amongst the masses out there that we're going to get a run to at least try to fail at all-time highs, break over, and then have a pullback. So we're either going to get a pullback on all-time highs or approaching it, or a pullback just above all-time highs. And until that sentiment changes, we're going to stay on that course. I want to make a note on that comment that I just made, too. I want to talk to you guys about something about that. Let me see if I can bring this up here. I want to be clear. I want to make clear about something here. You're going to see, as we get closer, now, unless we have some fundamental shift from the Fed, I want to be clear with you about something. I showed this the other day, and I want you to know something. Even if we get a pullback here today, this doesn't mean shit, okay? I want you to know that the market is poised These bears were wrong here. They were wrong here. They were wrong here, okay? And the market is poised to come up and fail all-time highs, meet all-time highs, and have a decent pullback. Or break over and make an all-time high and have a pullback. Read a story last night about it's never been this cheap to buy put spreads and puts for a market crash. And I want you to know that as we get closer up here, the cacophony of bears and sellers, you're gonna see an increase in the drumbeat of calling a top and the claims that they called a top. They're not calling the top. We all know the sentiment of the market is that we're going to do this right here. So there's no like top caller. They were calling crash down here. They were calling crash down here, down here, and they have not participated in any of this. And they're being forced right now to participate in this. These late cycle bull runs is when size comes in. I want you to realize that. Size actually enters the market as we come up here. They are forced into the market in size, and they will drive this market up to these upper targets up here before a substantial pullback. Even when we get this substantial pullback, it is likely going to go higher once again. So you're going to hear the top calling get really loud. When it eventually does roll over, you're then going to hear crash down here. And they're going to be wrong again. Okay, I want to make you aware of these two things that are going to take place. That you're going to hear this cacophony. As a matter of fact, I'm reading it right now in this article right here in the background. It's just, no, not reading that. They're calling it. You got someone saying we're not getting a soft landing, yet you should have bought this dip. You should buy this rollover here whenever this takes place as well. And you likely will see 5,000, if not 6,000, before you see a major roll inside the market, believe it or not. As a matter of fact, late last night, I was on a meeting, and we were looking at what the bottom likely is. Not this one, but the big one. And it's likely down here somewhere. Right down here somewhere, but this is like a year and a half, 2 years down the road. And you're going to look back in 5 or 10 years and have known that you should have bought this and know that you're going to get another opportunity to buy this. So, anyways, pulling the microscope back a little bit on today, and maybe apprehension that you have, the move is up. The move is up even if we come down and blast down today. The move is up. And the Fed knows this. I was on this call last night, and I'm like, you got these speakers for these banks, and they make these public comments. Like you got Marco, and you got Mike Wilson, and you got everybody. You got Jamie Dimon out there, and what they say to you, the little man out there, a little woman out there, is a lot different than if you're an investor with those people. You're an investor with JPM, Morgan Stanley. They send notes, and they're like, "Hey, it's time to buy," and then they put a ringleader out there that tells you where the risk is. So you have two different voices. If you keep your money with JPM, JPM said, buy this shit. They confirmed it in December, January. We had a post about it. There was a link to it. Then they deleted that link. But there's like two voices here. And it's kind of like pretend you had like me as a bull, right? And I'm telling you, this is the bottom. This is the place to buy. And then pretend I had a partner that was a bear. And he gave you the risk to the downside. That's what those guys function as. You get what I'm saying? That's what that's what those guys function as publicly. So if I had a partner back here, he's a bear, and he's like, you get like, hey, I trust CaptainJimJames, but I want to hear the risk side. That would be like we had our own Wilson in the background. Telling you the downside risk. Stephen Blitz, chief economist at Global Data, said, a dovish hike and talk of a soft landings at Wednesday's meeting would be a mistake for the Fed. I don't disagree with that, but the presser is not the press release either. The statement is actually policy from the Fed. So I do agree that Jerome has to come off kind of hawkish in his presser today, but you focus on the press release. Planes land, economies do not. Economies are an ongoing dynamic process, and no recession will prove more problematic for the Fed than not, Blitz wrote. The economy is heading into recession. But if it is somehow avoided, then disinflation of this moment will prove fleeting. So to the Fed's confidence that they're at the end of this hiking cycle. These fucking guys, right? These fucking analysts, they do not want to admit that we have a second business cycle going on right now from the COVID money. They do not want to they base all of this shit off of never experiencing COVID. So I don't trust any of these analysts right here. I don't trust what they're saying publicly. We're going to also go into the minutes from the last open market committee rate decision. So almost all Fed Reserve officials at their June meeting indicating further tightening is likely, if at a slower pace than rapid-fire rate increases that had characterized monetary policy since early 2022. According to minutes released Wednesday, policymakers decided against a rate rise amid concerns over economic growth, even though most members think further hikes are on the way. Citing the lagged impact of policy and other concerns, they saw room to skip the June meeting after enacting 10 straight rate increases. Now, that's the most in history, right? The most aggressive rate hike path in history. Officials felt that leaving the target range unchanged at this meeting would allow them more time to assess the economy's progress towards the committee's goals of maximum employment and price stability. Members voiced hesitance over a multitude of factors. They said that a brief pause would give the committee time to assess the impacts of the hikes, which have totaled 5 percentage points, the most aggressive moves since the early 80s. The economy was facing headwinds from tighter credit conditions, including higher rates for households and businesses, which would likely weigh on economic activity, hiring, and inflation, although the extent of these efforts remained uncertain, the minutes said. The unanimous decision not to raise rates came in consideration of the significant cumulative tightening in the stance of monetary policy and the lags with which policy affects economic activity and inflation, end quote. Remember the last June meeting, while being interviewed, Jerome said that they were confident that credit tightening effects have not been seen yet, and that they think they've done their job at this point, right? He made that those comments to a question inside the presser. Markets showed little reaction to the release last in June. The Dow Jones Industrial Average was off about 120 points during the final hour of trading, while yields were sharply higher. The document did reflect some disagreement among members. Now, this is the stuff that doesn't mean shit. Believe it or not, it doesn't. These guys are allowed to say whatever they want. These men and women are allowed to say whatever they want, but it really doesn't. So this is like their place to air out their laundry. According to projections, materials released after June 13th, 14th session, all but 2 of the 18 participants expect at least one hike would be appropriate this year. So just a key point here. One hike would be appropriate this year. That's right now. So that is implying that in September they might give the threat of another hike. Most members don't think you're going to get another hike this year. So the trick and balancing act here for the Fed is to give you your last hike, threaten another hike this year, data dependent, but you don't get a hike this year. That extends the bull run into the beginning of the year. The participants favoring a 25 basis point increase noted that the labor market remained very tight. We still have that right now, right? Momentum in economic activity had been stronger than earlier anticipated. We have that right now, too. And there were a few clear signs that inflation was on a path to return to the committee's 2% objective over time. Now, we are closer to that 2%. So one of those three things has been, not solved, but is on the right track. So I would expect today there should be some discussion over the growth of the economy and the Goldilocks aspect of unemployment and jobs that's going on in our economy right now. Even among those favoring tightening, there was a general feeling that the pace of hikes, which included 4 straight 0.75 percentage point increases at consecutive meetings, would abate. Many officials also noted that after rapidly tightening the stance of monetary policy last year, the committee had slowed the pace of tightening, and that a further moderation in the pace of policy firming was appropriate in order to provide additional time to observe the effects of cumulative tightening and assesses their implications for policy. Whew! A lot of big words there. Man. I think about my kids when I read this stuff. I'm like, these kids don't get a liberal arts education anymore. You try to get like a kid today to read something like that, and they're going to just fuck it all up. Since the meeting, policymakers mostly have stuck with the narrative that they don't want to give in too quickly on the inflation fight. In remarks to Congress a week after the June 13th, 14th meeting, Fed Chair Powell said the central bank has a long way to go to bring inflation back to the Fed's 2% goal. He also has emphasized the united front among the 18 open market committee members, noting that all of them foresee rates staying at least where they are through the end of the year, and all but two C rates rising. That has been largely true despite some misgivings. Fed Pres Bostic, for instance, has said that he thinks rates are sufficiently restrictive and officials can back off now as they wait for lagged impact from the 10 hikes making their way through the economy. Data has also been largely on the Fed's side, even though inflation remains well above the target. Yeah, okay. I think that's all I gotta read from these guys. Yep, I think that's all you guys need from me on this. So, what to expect today? We are squeezing right now up to the hourly trigger. Let me see if I can get that exact for you. Hang tight here for a minute. Right there. And then we're going to go with Nick Timmeros this morning. Let me take a quick break and ask you guys to say hello to you guys in the chat. Thanks for joining us today. So let me see what you guys are saying in the chat. Good morning, good afternoon to all of you. It's 11:39. We got 20 minutes left until 12 o'clock hour. My chat is not doing well here, so I'm going to refresh it. My chat is all fucked up today. Good morning. How's everybody doing out there? Stacy, good morning. How are you? Are you guys able to chat or no? Can someone in YouTube say something? Just chat in YouTube if possible. Say hello, Cap, or something like that. Oh, great. You guys can see me. All right. Let's see. Twitch, can you guys see me out? I'm having chat issues this morning as a heads up to you guys out there. You know, it's funny. You know what I'm going to ask right now about the poll results. I noticed that it wasn't closed yesterday, so I'll ask Winky. See what he has to say. I haven't been on my phone yet this morning. Hold on one second here. Hey, thanks, Jaden. Good morning. Good morning to all of you out there right now. Hang tight 1 second here. Hang tight 1 second. One second here. check for the hold on one second here. Ooh, that's nice. What's going on, Michael? How are you? Good morning. I gotta check this poll from yesterday. Hang tight 1 second. Hang tight 1 second here. I'm looking for the polls in here. I'm having a hard time finding it. Hold on 1 second here. I'm not seeing where the polls are on my dashboard here in the background. The results are in the chat. I didn't see him wink. Holy shit. So hawkish was the most voted option of the poll with 78.947, 3682105, 263% of the votes. Hawkish fed yesterday. I think I saw the poll was running after I think I shut the stream down and I saw the poll still running after we closed the poll, or after we closed the stream down yesterday. 78%, 80% hawkish vote. Holy shit. You guys are savages out there. Yeah, thank goodness that percentage is very specific. Not quite 78% or 79%, but pretty close. You guys needed one more vote, but you missed 80%. How many voters were there, Winky? Oh, yeah, I got you, Winky. So as Wink said, he set it for 12 hours. Winky, how many votes did we actually get? Like, would one more vote have, like, pushed us over to 80% or no? It is fascinating, too, because yesterday I was on the phone, or no, I was on a video meeting, and I was on a video meeting yesterday, and somebody said, at that video meeting, somebody said, someone said at that video meeting, can we just get down to the daily trigger, please? A bull. He was like, please. I think he was hawkish, not because he wants to be a bear. He just wants a bloodbath so that he can re-enter the market. So yeah, I think there were more voters than 38, Winky. There was a ton of people. Maybe it was 38. But it looked like there were yesterday in the, or maybe it didn't calculate all of them. Maybe people didn't vote like they thought they were voting. They didn't get calculated. I saw super hawks coming into the chat yesterday trying to vote. All I saw was hawkish all day long yesterday. You've got coupons ready to use. That's what that person last night was, Joe Donut. He was like, I was like, what are you feeling for tomorrow? He's like, I'm super hawkish. I was like, oh, you are? I was like, why? And he's like, well, I want to buy the daily trigger. He's like, I don't want to buy a squeeze up. I don't want to do any of that stuff. Coming right back up into this bottom from yesterday, right back where we were from the bottom here yesterday right now. Right back up to this little area right in there from yesterday. Hourly trigger in that same vicinity. This is where we got the bounce yesterday. If you were coming right back up right now. Now, there's another argument here, and that is the market forward looking? Does the market care about all of this talk, right? These are talking points by professionals, right? They have to do their job. They have to make their money. They have to sound smart. The question becomes, is that relevant to you? Is it relevant to you? Does it matter? What matters to you is making money in the stock market, right? That is what matters to you. Nick Timmeros, getting back to him, he's saying that economic growth has likely been too firm in recent months for Fed Chair Powell, right? We discussed that a few moments ago. We said he's done a great job at inflation. He has not tamped down economic growth nor jobs, has he? Economic growth has likely been too firm in recent months for Fed Chair Powell to signal that Wednesday's increase in the Fed's benchmark short-term rate to a 22-year high will be the last of the current tightening cycle. So Timmeros is stating that the Fed will imply that the tightening cycle is not over, or the threat of the tightening cycle will not be over. So we're going to listen to this really quick. I got something for you to listen to, I think. He's also says that it could come down to whether the next few months of data settles an argument between the two camps of economists. These are the people that say, so we can listen to this.
Most people don't really pay attention to what the Fed is doing, but these days it feels like it's getting a lot of attention. Do you feel like it's like you're covering a sports team?
Yeah, you're covering a winning sports team, not in the sense that the Fed is winning, but that, when there's action, when the team is doing well, when somebody's getting hot, then everybody's paying attention.
That's our colleague, Nick Timmeros. He covers the Federal Reserve, so he's always paying attention to what goes on at the Fed. And for Nick, tomorrow is like game day, because the Fed is expected to raise interest rates again. Another attempt to beat inflation.
The increase Wednesday has been so widely telegraphed that it would be shocking if the Fed didn't raise interest rates. So the question here is, has the Fed done enough? Is this interest rate increase enough? Well, does it tighten financial conditions enough where the Fed has confidence that the economy is going to continue to slow down and not reaccelerate?
The Fed's goal is to get inflation down to 2%. We've made a lot of progress in the last year, but we're sitting at around 4%. And it's that last yard that economists are fighting over. Does the Fed continue to act aggressively because inflation is still a big problem? Or has it done enough and inflation is on its way down?
This has been sort of the central fight in economics for the past 2 years. So you could compare it to two different football teams. And whenever one inflation report comes out and it says, oh boy, inflation looks really bad, one side is going to do an end zone dance, spike the football.
Okay, I like the picture of the end zone dances. Welcome to The Journal, our show about money, business, and power. I'm Jessica Mendoza. It's Tuesday, July 25th. Coming up on the show, the Fed is expected to raise interest rates tomorrow. Will this be the last time?
This episode is brought to you by Empower. Journalist Power Personal Dashboard, or
hey, the Fed is going to raise interest rates by 5 percentage points over the next 14 or 15 months. Not very many people would have believed you. And a lot of people would have said there's no way financial markets will manage that. There'll be a complete meltdown in stock prices. The bond market will go haywire.
And so this is very unusual, you would say.
It's quite unusual for the Fed to raise interest rates that rapidly.
So far, those rate hikes seem to have helped. Inflation has dropped from its peak of 9% to about 4%, depending on what inflation measurement you use.
Energy prices have come down. Goods prices are coming down. Housing rents are coming down.
That's a lot of success. But getting inflation all the way down to where the Fed wants it to be, that's where economists are getting stuck and disagreeing. Nick breaks them up into two camps. The first group says inflation is transitory, temporary, just due to these weird last few years. And it's not deeply ingrained in our economy.
One group, Team Transitory, they're taking a bottom-up look at inflation. They're saying, look, at the ground level, whether it's car prices or rents, you can see when they went up, you can see they're coming down. So just chill out here. We see that they're coming down. You don't have to weaken the economy more.
This group can go by another name, the optimists. The opposing group is more pessimistic. They say inflation is likely to stay high without more action from the Fed.
I would call them Team Persistent. They are worried that inflation will persist at a higher level. Maybe it won't be 6 or 7% that we saw a year ago, but still 3 or 4% would be uncomfortable. And they're saying, well, wait a minute. There are deeper underlying forces at work. And if you look at the big picture, you can see that people are making more money. They're spending more. They feel wealthier. They have money to spend, even if it's not keeping up with inflation. And as long as people continue to spend, you're not going to put the downward pressure that you need to get inflation
Have
to
a
go
nice
down.
bull cross on
Team
HYG right
Persistent
now.
has been more pessimistic. They're saying there's going to be more pain. You're going to have greater sacrifice required, which means more people are going to have to lose their jobs to get inflation.
Apple recovering from the open this morning.
So back to Team Transitory, the optimists, the ones who are saying, relax, inflation is coming down, it just needs time.
The general theory of their case is price increases went up because of things outside of the Fed's control. They went up because of the pandemic. They went up because supply chains were really messed up. They went up because energy prices went up a lot. Those things have now fixed. The pandemic's over. They're now coming down. And even if you look at the services that are still elevated, they're reflecting sort of pandemic-related distortions. Airlines that couldn't meet supply and demand a year ago. Your car insurer lost a lot of money because car prices went up, so they had to jack up premiums. But those things should also run their course. And so they would say, hey, Fed, stop it with interest rate increases. You've done enough. It's going to fix itself. It was always going to fix itself on its own. In part, you've slowed down demand enough. That would be sort of the optimistic story here, is that this all can come back down on its own. And hopefully the Fed hasn't done overkill and we will have a soft landing.
Lots of people, including the Fed, have said that the best outcome would be a soft landing, meaning we can get inflation back down to target without risking a recession and many people's jobs.
That's always the goal. It's very difficult to do. There's a very thin list of examples of soft landings. So I don't think the Fed has been
Three trigger bull cluster
landing,
looking for a squeeze and retest on the
pandemic
HG.
Created a lot of unusual disruptions in the economy. And so there are reasons to think that this time could be different. Of course, every time I hear myself saying this time could be different, I sort of want to slap myself because that's what people say in every cycle, and it's usually not different.
The optimists think that if the Fed keeps raising interest rates, that could hurt the chance of a soft landing, and it could tip us into an unnecessary recession. They want to give the economy time to metabolize all the changes of the last couple of years.
The 1 minute is a little frosty right now.
That isn't
5
as strong
minute
for the
looks like
optimist's
looking
case.
for a pullback here.
Labor costs. Even though energy, housing, and other consumer goods are coming down, services and the labor that goes along with them is more stubborn. Average wages are still high.
Think about all the things that you consume that are services, going to the doctor, getting your hair cut, taking your pet for lodging if you go on a trip. And those are things that tend to be more labor intensive. You're paying for, when you get a restaurant meal, you're paying for somebody to cook the meal for you and bring it to your table. So the labor bill is a big part of that. And the question now is, how much of a slowdown in the labor market, if any, do you need to get that last bucket of inflation to behave more like it did before the pandemic?
This is exactly what Team Persistent, the pessimists, takes issue with. For the optimists, the labor market is one data point out of many. For Team Persistent, it is the data point. Basically, they say that to make an anti-inflation omelet, you're going to have to break a few eggs. That's coming up.
Going to do if, and so they've been arguing that, look, it's great that inflation's coming down, but what are you going to do?
Yeah, this is an interview with Nick Timmeros right now.
3.5% or something closer to 4%, and you've been saying that 2% is your target. What are you going to do then?
These pessimists argue that inflation has to come all the way down to the Fed's target of 2%. Getting close isn't close enough.
I would say the pessimists aren't necessarily saying the Fed has to raise interest rates a lot more. We're really arguing here about whether after Wednesday's anticipated increase, you're going to have to raise rates maybe one more time. I think the bigger issue behind that is just how easy is this going to be to get inflation to come down. If the Fed has to hold interest rates at higher levels for longer, then you could begin to see more weakness in the economy over time.
Could you walk us through the logic behind what this camp is saying to get inflation that last mile down to 2%? What do you need to do?
Well, this camp is saying that to get inflation down that last mile, you really need to get wage growth to slow. Wages reveal what employers think they can recover via prices or productivity, and what workers expect given their own cost of living. So the more pessimistic camp will say, until you get wage growth to slow down, you can't really be confident that you're going to get inflation back to where you need it to go.
And the only way that wages slow down, big picture, is for people to lose their jobs and unemployment to go up.
Typically, you don't cover that last mile without a downturn because workers and businesses don't just, voluntarily lower their prices or accept lower wages on their own. Think about your own situation at work. For the last 2 years, for most people, inflation went up more than your pay did. And so when you're bargaining with your employer, this year for what wage you should get next year, are you really going to accept 0% inflation adjusted pay gains? Probably not. So now people are going to demand more pay, and businesses are going to have to think about, am I going to accept less margin, let my profit get squeezed? Am I going to try to pass that increase along to customers? That's what's going to determine how easy it is to get inflation down.
So I think if I'm understanding you correctly, like wages are still going up, which sounds like it's good for workers, for the average worker. Like, how could that be bad for the economy?
It is good for the worker. I mean, the best news is that in the last couple of months, wages are now going up more than inflation. So you are getting an inflation-adjusted bump. Your money, the money you're making now can actually cover your costs. That's great. The concern for anybody who wanted to see the economy slow down, i.e. the Fed, would be, well, if people are making more money, that's going to allow them to spend more. And if there isn't more supply, then prices will go back up again.
And so Team Persistent argues that the Fed will need to raise interest rates to help control wages. But is there a scenario in which a resilient labor market might be good because it might bring about or help bring about a soft landing?
Absolutely. Yeah, absolutely. I mean, the fact that interest rates have gone up so much in the last year and the unemployment rate has basically barely budged. It was at 3.6% in June. That's a sign of resilience that, the economy has been able to withstand higher rates so far. And so maybe it has allowed the Fed to fight inflation, or at least manage against the risks that inflation would have gone even higher if they hadn't raised rates, without having to do serious damage to the labor market.
Okay. It feels sort of weirdly paradoxical.
It is. I mean, everything about the economy over the past 3 years has been weird, right? I mean, we shut everything down for a few months, turned it back on, and what we learned was it just, it's a very complex thing, and you can't flip the switch.
Why is it so important to get inflation down to 2%?
That's a really good question, because you're going to be hearing a lot of people say, maybe it's not so important to get it to 2%. If you got it from 9 to 3, take the win, and don't focus so myopically on 2%. Now, for the Fed, it's important because they said 2% was their target, and their whole strategy of targeting inflation, i.e. having a target, means you have to hit your target. The Fed believes that they have to follow through on what they said they were going to do to be credible. And if you just declare victory at 3%, then you won't be credible the next time inflation goes to 4%. Maybe people will say, well, they said 2 last time and they settled at 3, maybe 4% will be good enough. And that's how you lose control of these kind of amorphous, mystical inflation expectations.
Got it. Right. Like, so one camp is almost asking, like, is it worth risking a recession to maintain credibility? And the other camp is saying, kinda, yeah.
Yeah, that's exactly it. This is all about, doing what you said you were going to do. And that makes it easier to actually get inflation down next time, because people will believe, these things can influence sort of the vibes of the economy to an extent.
No matter which camp is right about inflation, the average consumer shouldn't expect prices to drop.
2% inflation or 3% inflation means prices will still be more a year from now than they were today. It just means they won't be going up quite so fast.
That's the rate of inflation.
If you're paying like $4 or $5 for a cup of coffee, you're saying, when is it going to go back to the $3 or the $2 I was paying before? Spoiler alert, it's not going to go back. Once the price level goes up, it usually doesn't go back down.
So warning here, there's a roll risk
with 2%
that's not seen in the market, just a heads up.
As much as it was going up.
Are you a betting man, Nick?
No, I'm not.
I had a feeling you would say.
All right, so I'm going to turn that off right where we are. Just a couple things. The market is showing an explosive move to the upside. Velo is saying no, that we can likely have a liquidation break here. Just be conscious of that if you get shaken out of a position. Now, that end of that last part of that conversation is the secret squirrel. And that is, inflation has come down, but the rate of inflation we're not above. And we need to actually get above the rate of inflation for you to see a lot of your costs come down. And that has not happened yet. We need to be above, I believe, 7%, 7.5%. Correct me if I'm wrong on that number, but I think it's somewhere around there. 7.25, 7.5 to begin to fight inflation. And we were talking about that yesterday. I think Jay Barry and I were saying yesterday that, the cheapness of money, and as time passes, makes money cheaper no matter what. Unless you're above the rate of inflation, what you're going to end up seeing Hold on a second here. The rate of, hold on one second. I'm trying to have a text message conversation while we're trying to do a Fed meeting. The rate of inflation is a problem. If you don't get above the rate of inflation, the stock market will price in ultimately inflation climbing over time, right? Can't have cheap. You can't have Apple stock sitting sideways for 2 years. And then the rate of inflation marches on over time. I'm having chat issues this morning. Now, I did wonder about. So we've been trading these gas and oil refining and transportation stock tickers, and I was wondering about I was reading that story. Did you guys see that story about the readings in Florida of the water temps of 101 degrees and the insurance companies, hurricane insurance companies, just stopping to provide coverage for hurricanes in Florida? Like piques my interest. If you're from Florida, do you think you're going to get like category 4s, 5s, and 6s? Maybe like 1/6 hurricane this fall or not? We also had 3 plays on yesterday for earnings. We called Google as going up. It went up. We called Microsoft as going down. It went down. And then we called out Snap as a potential play for an up and downside move. We had talked about a farther out in time trade with puts and calls for an upside target and a down. I think it was $10 and $15 because of an 18% implied move. It was kind of wild watching Snap yesterday. It didn't quite trade the $15. It traded $13.34. Immediately rolled over and is now down at that $10.19. Are any of you going to take? If any of you took that trade yesterday on Snap, it was a wide trade on $10 and $15 down the road. Let me know if you're going to take the money on the $10 put for next week and then hold the calls to see if we swing up in the next 2 weeks on Snap or not. I'm interested to find out what your thoughts are on that. So those are 3 successful trades yesterday on earnings plays. Yeah, you've got it at 8%, Jimmy. Yeah, I do believe that, too, that they're hiding true inflation. I'm also reading Cap. I live in Louisiana, and insurance companies are pulling out left and right. Home insurance more than doubled. I think Floridians had 3 choices. They're now down to just the state, right? I could be wrong on that. Don't hold me to this conversation, to these being facts, because this is all my memory recall right now. Yeah, we can look at Amazon if you want to. So we were 3 for 3 on earnings calls yesterday. Well, we're 3 for 2.5 right now. We're going to have to see, because we're at the $10 on Snap, so we just have to see if it goes back up and hits the high target in the next week, week and a half. Yeah, they supposedly, I'll look at Amazon for their earnings for you, Jimmy. And then supposedly it was a world record yesterday. World record yesterday in Florida. 2 different buoys recorded temperatures of 101 degrees. Now, there are some arguments out there about it being murky water or whatever. Now, these buoys, they take temperatures multiple times in an hour. They give you an average reading. It's not like, oh, for just 1 second it was 101 degrees. And those buoys are, like 5 feet down. They're not on like the top of the fucking water, the top like inch of water. And if you're from the South, if you're a sailor, that when you have high speed winds and you have a hot top layer of water, you get evaporation, and you've got those moving winds, right? Evaporation on the top layer of water, especially if you get any brackish water down, stuff like that, starts blowing up into the upper atmosphere, and you get strong winds coming through. Boom, you got yourself a hurricane. Trade winds all coming in together, creating a vortex, and sure enough, you're super fucked. Let me read the comments here. Yeah, from what I'm understanding, it's not it's right now. There's no new insurance being available. Yeah, fire insurance. Yeah, but Malibu, like I used to live out there. I used to live in Santa Monica. Like Malibu Hills, man, that's like a tinderbox at all times, right? Yeah, triple or more. He just had to cancel because of but we have a hard time insuring our properties here in Detroit as well. We have our own problems. We've got problems with insuring vehicles. Yeah, if you guys knew what I paid for car insurance, your eyes would pop out of your head. And what we pay for home insurance here is out of control as well. Now, we do have something here in Michigan. We've got no-fault auto insurance, which is, I disagree with that as well. Well, I don't know if I disagree with the intent of no-fault insurance. I believe that everybody should be able to have health insurance of some kind, just like you have the fire departments. But because of how it's structured or built here, it's a lot like, insurance for all in the U.S. It's greed. When insuring to the virus is actually there, a bunch of clowns, anyone paying premiums getting scammed. Yeah, that's the other thing too, right? It's like, how many I don't make any claims on my insurance as well, right? Most of you that have insurance know that you don't want to ever make a claim unless it's catastrophic. Yeah, it was laugh out loud ridiculous in Colorado. I don't remember my insurance in Colorado being too bad. The best Utah had great insurance. Next door to us in Ohio, the car insurance is dirt cheap. We pay right now. We're paying probably. I'll have to ask my wife, but we're above $10,000 a year. Somewhere between 10 and 15K a year for insurance on our vehicles. It's insane. Yeah, did you see that? Did you see the meteorologist, Sparky? He was like, the meteorologist. It looked like the broadcast from the meteorologist looked like a scene out of Independence, like one of these movies, like like I'm a climate denier and I'm on TV right now and we're super fucked. It was hilarious. The guy was like, I don't know what to say. We're really fucked here. We're in deep shit. Oops. Although I went down the rabbit hole with this climate science stuff last night quickly. And like Nature magazine had something about a catastrophe coming in 2025. And it was really loosely written. It was kind of like, you don't know. And, we all know what we're doing to the climate. But then, of course, I went down further into the rabbit hole, and MIT had some scientists with big discussions on YouTube. MIT did a big thing on this, and I had to listen through an hour and a half until I got to the point where they said, yeah, we're fucked, but you're not going to see an ice age in 2025. It's still going to take. We're over the tipping point. It's going to get triggered around then. Probably have another 25 years until you're super fucked. And then the fucked up part of it, too, is that it's like, well, it's Europe that's fucked, not the U.S., so what do we care? I was like, man, this is so fucked up. Yeah. That's when they said it. That's when they said we triggered it. They said we triggered it, I think, in 85 or not. Between 85 and 90, we actually triggered it. That's when we fucked up back then. It was too late way back in 85 and between 85 and 92, I think. They said it was too late in that time period. They said now we're going to have the ice age is going to start in 2025. There's no coming back from it either. Like this one guy was like, it'll still be another 25 or 50 years until you see the major effects of it. And then the guy from MIT was like, can we fix it? And the guy was like, no fucking way. There ain't no fucking fixing this. You're totally fucked. I was like, oh shit. Yeah. Yeah. I don't think there's any kind of, from what I understood, it's not. It's like there's a lot of like fear news over this, but at the same time, all of these things have happened. So, but it's like on a scale of like, what are you going to see in your lifetime? Probably not. Your grandkids are probably fucked. If you're like a young guy, woman, if you're like 20s, 30 years old, you're probably not fucked, but, and we'll probably adapt to living with it. It's gross to say that, but that's likely what'll happen. You'll end up, it's gross to say that, but it's likely what's going to take place. You're going to have to adapt to that. Now, I do want to let you know that there's likely going to be at some point some kind of weakness into this 2 o'clock hour here. We often see that. You'll see like, hey, it looks really bullish. Then you see that quick bloodbath and the move higher. So I am looking to buy a dip down below if possible. If you guys want to know my idea here, I've got calls right now from yesterday. Bought some calls in that close after the closing bell. And I'm looking to add to that position today. So I am looking for some kind of a bloodbath down here. If there's any kind of an extreme, there's a bunch of stuff I got to go over with you guys. Some of you guys know this, some of you guys don't. So I'm going to go over some of this with you. I want to get some key points out here for you, okay? Number one, key points. As we head, it's 12:22. We got an hour and a half. So I'm going to go over some key points here. Number fucking one. You do not have to trade today. I make this statement known every single time we do one of these rate decisions. And every single time somebody comes back inside the chat and they say something like, I picked the direction right, or they repriced it on me, or I should have just waited until tomorrow. I'm going to tell all of you out there right now, there's no reason for you to trade these events. What they do is they cause a lot of traders, especially new traders. People don't understand the mechanics. And I don't mean understand. I mean the mechanics of the market very quickly. Like your brain can compute, oh shit, I'm fucked, or oh shit, I'm not. And you're actually not going to make mistakes. So if you still want to have some skin in the game, buy yourself one contract. If you get a large account, buy 100 contracts. Don't be betting like fucking 100% of your fucking accounts, and then 100% of your accounts, then doubling down. Any of that kind of stupid shit. So that's rule number one on these events. Usually, the best trade is a reaction trade, and that will likely take place after today. If you miss a trade higher, you'll have 20/20 vision. If you miss the trade lower, you'll have 20/20 vision. Doesn't fucking matter. You can say it, you can make any excuse you want in the world. It doesn't fucking matter. And if anything, this serves, if you're going to trade this is going to serve as a good time for you to break yourself out of crayon, and preferably a triangle crayon and a piece of paper, and go back and look at how you fucked up in your decision making, if you fuck this up. So there are some key points here to also say. That would be, this is our expected move up and down on this event. Oftentimes, and there's one other thing one other key point here, and that would be that you have more economic news coming out tomorrow and Friday, and you'll hear some bullshit about how you'll always hear this news like, well, they're still waiting on more news Thursday and Friday. You'll hear that bullshit after the fact. Now you have two events here. You've got the press release. We will have that released here on the show live. You then have the Jerome Powell interview. Two vol events. You will get a repricing inside of the initial news. You'll get a repricing during the interview. And you'll get a further repricing again as we close the day out. I don't care if we're going up or down. Okay? You're going to get a repricing 2-3 times. You could pick the right direction and still be fucking wrong afterwards. You could you could sit down here and buy yourself some calls. Let's say you bleed down, right? You buy some calls. Woohoo! We fail right here. They reprice. Then we go up. We're right where you want to be and fail again. And you're now wrong in your trade. Does that make sense to you? I gotta impress this upon you. Spreads can help with that. Time on your trade can help with that. But if you're trading 0 dates, that kind of stuff, I need you to understand that you will get repricing, as 1, 2, and then even if we went up here, you could possibly have 3. We have implied volatility, right? We've got event volatility, and we have vol crush. If we have any positivity that comes out of this, just the event vol will get crushed on you. The interest will get crushed on you. So I have to be very crystal clear with you on that on this event today. Another note here would be when the presser starts. It can be the price can be all over the place, right? We can trade up until just before the presser, roll down into the presser, and oftentimes you'll see negativity. We could be way up here. Come into the presser and it rolls right back down here, okay, and hits both sides. The expected upside, the expected downside move. Actually, it would hit, it would fail, believe it or not, and fail. So be careful of the interview or the presser. Another point on the presser would be the questions that come at the end can sometimes be some of the most brutal questions that are asked, and it's also about 2/3 of the way through the pressers. Jerome will oftentimes become very aggressive in his responses. He will say things that are off script, so be aware of that as well. So you've got a lot of landmines, pitfalls, that kind of stuff along the way. Knowing where the expected move is, you have the possibility of, let's say you come down here, you get a good release, right? You're going to be able to see a place to take a long. Or if you get the press release, we're coming down here, let's say we get a bad press release. You know not to buy calls, right? We could start to trade down to the daily trigger. I also want you to be aware that there are bulls out there, not just bears. There are bulls out there that want to see a much lower target. They're looking for 446 at minimum to get down to. Another note here is that we are getting close to a correction. We're going to talk about that before over these next 15 minutes. We're going to take a look at the marketplace, and we're going to talk about that. So we're going to do that right now, actually. So we're getting close to a correction, not top, like we're going to fucking crash. None of that stuff. We're going to talk about that right now. Give me 1 second here. The it's been chewing on it for a couple days, or no, maybe 2 weeks. And then discussing it with Joe and Quinn and a bunch of other people, and then people from the Discord, some admins and stuff. And was going through the mechanics of some of this stuff, and I was like, I see something here. So we're going to take a look at what I saw, and we're going to look at that right now. All right. Welcome to the show if this is your first time here. Now, I want to draw your attention to something here, okay? And what I want to draw your attention to is two important things. Take notes, because take notes. So I want to draw your attention to the difference between a correction and a rollover. So let me move this down here. All right, it doesn't matter. So I wanted to show you a difference between a correction and a rollover. You'll sometimes see price break below the yellow line right here, but the yellow line continue higher. Right, you got to pull back. Correction right here. Correction right here, right? Yet the yellow line continues higher. You can also see moments where we get a correction, but the yellow line follows with price. Corrective, non-corrective. There's some other indicators as to if we're getting a correction or a roll in the market. We have not fulfilled those. That's down here. We're not topping right now. So we're not expecting a market top right now at this moment, but we are expecting a correction. And the reason for it is I want to draw your attention to when we begin to top out here, and we are right now beginning to top out here. Whenever we see a decline, a top and decline in daily velo, we tend to get a weak moment inside the market. Same thing right here. Weak moments inside the market. And we're starting to see that right now, right here. So we have high risk of a pullback here. Likely a break, brief break of the daily trigger to about 440. 440, 446, somewhere in there. We are setting up for it right now in a higher time frame. Does it mean it happens today? No. But I want you to be aware of it because we have an event today. We have economic news that we're waiting on Thursday and Friday. We are primed for that kind of a downside move in the marketplace. The conditions are there. The conditions are not there for this market to roll over, but the conditions are there for us to take a roll down. I'm going to show you something else right now. I'll move this away here. I'm going to show you another chart here. It's the one nobody's seen here. And I'm going to show you one other thing that's important here, and this is on a swing trading chart for SPY. SPOOs doesn't really matter. Now, we can squeeze up today on this event. If we get good news, we blast up here. You might miss that trade on No, we won't go that high, but you get my point, right? You get the illustrative point here. You might miss the trade up today, but when you're looking for prime candidates for a swing trade, hang tight for a second here. Like, hey, I feel confident in this trade, a multi-day trade to the upside. We're not really where we want to be. Now, saying that, watch this yellow right here. This yellow is telling me that whatever pullback there is will be corrective and not a rollover. This yellow is saying we're extremely bullish right now. This is actually good. We're in a bull market. We're not seeing declining velo in the daily, so any pullback that we have should be bought. But it's not a prime candidate. See this green down here? It's not a prime candidate for a dip to buy with confidence. You can actually see it right here. Hold on. You can actually see the confidence coming in to buy a move to the upside. You can actually see another one right here forming, right, for some more confidence to buy a move to the upside, right? Multi-day, multi-week, multi-day, buys to the upside. Do we see the green to the downside right now? No, we do not. Do we see the white to the downside right now? No, we do not. Do we see a major low on the 5 down here? No, we do not. So on a swing trade basis, we already know that we're due for a correction. We already know that we're not set up for a great trade over here, right? We're not down here already looking for a great trade. We don't already have it set up for us to get that beautiful trade. You can see down here, I want you to see this right there, right? We're not seeing that right there, are we? So not seeing this right now in a swing trade to the upside, I have no confidence. Even if we go higher today, I have no confidence in the next week or two that we are going higher. Now we can, and price action will always prevail. If at any point you see price get above and across, you see price get above, let's say. If you see price get above here and the red line goes down and price is up here, sure, I'll take that long with you. But the swing trade to the upside is not showing itself right now. So that's number 2 against you if you're a bull. And I'm going to show you one last one here in just a moment. We are rolling right now in the market. And this is the last one that I want to talk to you about. This is a day trader chart. And I want to talk to you about this last one right here. On an intraday day trader chart, we're not at lows down here, are we? We are in the 1 minute, but not the 1 and 5 minute for even a 1 or 5 minute trade right now. We are losing velo on the hourly. I want you to look at the hourly here, and we are losing velo. I want you to see the sideways movement right here of the hourly trading sideways and now starting to curl down. So hourly is telling you we're bearish on a day trader chart. The hourly is telling you we're bearish. We're not at a bottom on the 1 and 5 minute. So even for a day trader 1 or 5 minute trade, there's nothing there for you. Now, I do want to say to you, if at any point you see price above the green here, you see a successful retest of the green line, right? We trade up. We trade up, right? You see the green line turning up. You have a successful retest, and you see price above the white and yellow line. I'll get bullish and follow it up regardless of what Velo and the higher time frame charts and the correction chart says, and the 30-minute swing trade chart says. So, if price ever gets above all this stuff, sure, I'll take it long. But the 3 things that I have are saying be wary into today. Now, saying that, these events can be wild, right? These events can kind of like rip up all of your theses. So for a bull, you have a lot of risk here today, a substantial amount of risk for a major roll down. I'm going to warn you into this specific meeting that's what I'm seeing in the background. I spent a lot of time late last night I was awake until 3 in the fucking morning doing this. And for me specifically, looking at that stuff last night, I personally would need to see either a target of 451, 446, 440 to long this market, or I would need to see price above the hourly trigger, the 1 and 5 minute trigger, with a successful retest. I wouldn't even trust a trade up here to hold. I'd want to see some kind of reversal here, like a failure here at 456.40. And then I would also need to see the movement up of the hourly trigger, and I would also need to see price be above the white and the red line and start to make its way up over here somewhere, okay? Whether that's today or tomorrow, I don't care. So I want you to know that in the background, the mechanics of the market are showing weakness that is unseen right now, regardless of what market-making news there might be. Did that piss off the bulls in this broadcast? I bet it did. I bet it pissed off the bulls. That's all you need to know right now. Just think of me as the black box here. Can I take a look at IWM? IWM is in the 4th or 5th day of a dip buy. And is bullish right now, believe it or not. But all bets are off today. I want to warn you that regardless of your positioning, the market rules over every other index out there. Rules over DIA, like SPX, DIA rule, like DIA kind of rules everything to an extent. But the S&P 500 is one of the best bellwethers. So even if IWM looks good, the greater market moves will prevail. So for me right now, if you are trying to enter a position of bullishness on IWM, I'm going to say to you, wait until the event is done. Yeah, I mean, it's like right now I'm looking at IWM. It looks great. It looks overall great. It looks really good overall, but you know, it's like there was another ticker yesterday. We have to go. You know, what we have to go over today, by the way, or if we have time today by end of day, we need to review PACW. We need to take a look at PACW because PACW is showing signs of a lot of other growth tickers. Not necessarily bearish. As a matter of fact, let me take a look at this right now. Yeah, it did catch a bounce. So I was wondering if it would. Good. I wanted to talk to you guys about PACW yesterday, and I didn't get a chance to. There were some tickers that have been selling off. There's another one, Spotify. So I re-reviewed PACW after the close yesterday, and I also looked at Spotify yesterday, and they're bouncing right now. And Spotify specifically is a beautiful. Spotify is a beautiful example of bullishness and a pullback to go higher. Matter of fact, Spotify is recovering right now. And we're going to review, if we have time today, we're going to try to compare and contrast Spotify to a lot of spec growth and how you can have moments in these tickers where you get that major drawdown. You want something cool? There's a lot of bearishness yesterday in the news on Spotify, and this is Spotify right now. It actually bounced almost perfect on its weekly down here, and it's going to need some time to recover here. It's got some work to do to continue to go higher, but Spotify is one of those companies that was showing a recovery. You know, it was all positive, positive, positive. You get the initial move higher on it. We actually got a target on Spotify. We hit our target on Spotify. We have charted this one in the past. We tagged it, dude, 177.77, and people were wiling about that yesterday. And people were crying. People in the stream. People are panicking. And I was kind of shocked because we already charted this thing out. And so if you're tactful here, you already knew that the first target was hit at 177, and you already knew to take your money. But another fascinating part about this was we went right down to the weekly. So sometimes, you guys know when I chart these things and I say, yeah, there might be a dip by really low on this ticker. Here's an example of it happening. And so people are like, I'm getting torched. And I'm like, well, wait a minute. Why didn't you take your profit up here? And why weren't you looking for a dip buy down here for continuation to the upside to that 196 and 215.40? So I'm a little fascinated by the news. I'm fascinated by the spinning of the news. I'm fascinated by bulls. Like, did you not enter until we got up here? Did you see us chart this out? And actually, here's your monthly right here. So if you have a recovery of the monthly and it's turning positive, believe it or not, if you have a recovery here, there could be a continuation back to the upside for Spotify. So I'm always fascinated by the cacophony of loud noise out there and what the truth actually is. So Spotify, we'll go over that one again later at some point. We'll go over that one later at some point and review Spotify against some of these other tickers that we have in our investment portfolio and say, hey, if we go down there, are you going to be a buyer? Are you going to be a crier? Are you going to read the news and think and believe the news? That kind of stuff. And we have some of these tickers are like, hey, we're squeezing right now to these huge highs. Some of these tickers are like, we got a ton of vol ahead of us. Some of these tickers are, hey, we'll squeeze, but it's going to be 6 months down the road. And some of these tickers are saying, hey, we're going to get a pullback down to that weekly at some point. So fairly easy to see where to take profit on Spotify. Fairly easy to see the roll and a couple lower bound targets to buy a dip on Spotify. And I wonder who sold Spotify at 141.06. I'm fascinated if because that's not the stops. That's actually the buy, and your stops are lower. So like you had the sell above, people probably entering, right? They're buying when you should be selling. You've got the place to actually buy. There are probably people selling, and the stops are actually lower on that ticker. So I'm fascinated by that. Let's put that up right there. How's everybody doing out there? Yeah, happy JPOW Day to you as well. I'm looking forward to this one. I was pretty bullish into this. Personally, I was pretty bullish into this meeting today, and I'm slowly turning kind of bearish here. Maybe I just need to get it out. Maybe I just need to get all the bearishness out of me today. Oh, you're doing well. Right on, Rockwood. I made Bazra and Chase happy today. Yeah, I'm not necessarily bearish. I just know the setup is there. So I got to let you guys know that it's there as well. It's not that choice setup that I'm always looking for, right? You got the 30 up right now. The 1 minute goes down here. I'm going to turn off Nick Timmeros. I'll put the news squawker on for you guys. 12:49. Hour and 10 minutes left. And the chat, the poll is hawkish as well today. I also want you to be aware that there are 117,000 calls on today's expiry for at 94 cents for 455C. Large concentration of calls. There's also a large concentration of calls on 455C for tomorrow, for the 27th. And then for the 28th, for Friday, there are 20,000 puts for $1.91 for 454P. We also have 6,000 puts for the 31st for 6,000 OI of puts on the 31st for next week for puts. We have mostly put buyers for Friday and Monday. Bear curious, baby. you were bullshit to my depressing pep talk earlier. You know, I'm interested in, you know, like the bleed down and then good news trade. I'm interested in that trade. Now, does it come to me? No. Does a hedge fund close his shorts and we start squeezing up before we get there? More than likely. More than likely. Are you serious? We've got another storm coming today? Dude, I kid. So just a heads up to you out there right now that we're getting another storm. I'm going to look right now. Man, dude, like Michigan and their power, dude, like DTE has got to be, like, I don't know if Texas is worse than us at this point. This might be the worst I've ever experienced anywhere when it comes to like outages. You guys should go to like the Detroit, Michigan subreddit. It's like every fucking week. It's every fucking week in Michigan. It's out of control. Let me check the news forecast. I can't believe we're getting another one. If the stream shuts off at any point today, I apologize. Should I just switch over to I could switch over to the generator and turn on the breaker or turn off breakers to other stuff. So I guarantee, oh shit, look at that. Gusts of 25 miles an hour. Fucking awesome. Half and 3/4 inch possible. Showers and thunderstorms tonight, mainly before 11 p.m. Some storms could be severe with heavy rain, low around 71. Nice. So we probably will lose power at some point this evening. Good luck to you if you're in Michigan. You're fucked. I can't believe this shit. Yeah, I know shit, right? I need a bigger generator. I need to be able to run the office on a Jenny too, I guess. And it kind of sucks. Oh, that's the other thing. I was talking to a buddy and to Chaz, and he was like, "So now I want to run. So now I want to run hard pipe. I want to run like some hard pipe and hook up the generator, or convert the generator that I just got a new generator, and convert it to natural gas. That I like that idea. So like right now, when we lose power, I can't leave. I have to stay at the house. Like I have to stay at the fucking house, and the wife and kids are like, we're out of here. And if I had a natural gas generator, I would feel more comfortable with a natural gas generator not having to be here. Touching a rug pull right now on the SPY. Not bad, huh? Not bad for 6 sessions. Charted that shit out, doing exactly what we thought it would do. Heading down right now to retest S1. If you're just joining us for the first time and you pay people for your levels or whatever it is that you do out there for your favorite ticker, we have a tool being built to do all the tickers. And if you ever want to get some, if you ever want to get or join a private Twitter handle, you can always join me on at Captain's Alpha. There's the handle for Twitter. You just follow, and I approve people in the morning. So you can get levels every day. As a matter of fact, those levels are growing into an actual. You just punch in your favorite company, and it gives it to you every morning. Some of you out there in Discord have actually seen that tool at this point. Some of you are on the website every day looking for anything flashing publicly. And so some of the tools that we have there are starting to pop up and pop off as the devs are testing them. Another option for you would be to join our Discord. It is currently open and free right now. So I will post a link to that. If you're just joining us, you want a place to go. Our Discord is a great community. It's taken a lot of work to get there. We've had many challenges trying to get that Discord to a point where it has an edge over the market. We have professional traders in there, semi-professional traders in there, retailers in there. We've got some great admins and moderators. Our members are empowered. It's useful. It's easy to navigate. It's enjoyable. So if you're looking for a place to call home that's not a wasteland shithole like Twitter, or a place you want to shit post on Wall Street Bets, or a lot of young traders like maybe StockTwits, our Discord is a great place to be. We've got people actively trading the stock market, cryptocurrency, stocks themselves, options, and futures and Globex. We've got some great teachers in there as well. We have an educational series in there as well. So you can get an education. It's all free right now. So it's been free for 2.5 years or something like that. And it's only gotten better over time. So if you need a place to go, I don't know how long it's going to be open to the public. I don't know how long it's going to be completely free. We have some issues right now trying to kick the wolves out of there. I guess we got some wolves in there right now. So we might have to switch to a very cheap pay model at some point, just like the chat we've had to do with the chat to kick out the scammers, the bots, the wolves, all that kind of shit, trying to resell and all that kind of stuff, trying to pull alpha from the Discord. But if you want to get in there right now, it's open to you. So there's your chance. Yeah, join up. Just like any other place. Sign up, get in there, and be quiet. That's the best thing to always do. Bounce around. A cool place to be today would be inside the Futures Globex channel. Would be a great place for you today. You could actually open up a screener at home with the Discord to the Futures Globex channel and check that out and see who's posting in there. One of my two guys that I love in there would be John L. and David AMS. And David AMS, I used to trade with him privately in a small group, 2 people, many years ago, and he is one of the best traders that I've ever met. So if you can be in a room with that guy or someone like him trading, they're going to guide you through how to trade, be successful trading. So get on in there, pop up, open a screener, introduce yourself, say, hey, I'm new, and I'm here to learn or make money or whatever it is. And that kind of stuff, right? I'm a sponge. Getting a quick bounce right now off of S1 down below here. A little bit of a rug pull down below. A bear cross on a 1-minute chart right now on the on the 20 or the 30 and the 2, or 130 and 30 right here. A little bit of a bear cross confirmation to some blood as we head into this most important event. If you're just joining us and want my take on this on the day today, I think you are getting 25 BPS. I think the language will change in the there'll be even more modification to the actual language of the press release statement, further reinforcing a more lengthy pause. I think you are going to get the language from Chair Powell trying to talk the market down to some extent with threats down the road. I think that they need to keep threats for higher rates
We are now
down the
just
road.
under an hour away to the headline event of the day, the US interest rate decision and FOMC rate statement following this. So have an almost unanimous expectation here for a 25 basis point hike up to 5.5% in this decision. So this is from analysts and also from market pricing via CME FedWatch, which today has been sitting around 98.9% chance seen of that 25 basis point hike. So just as another reminder, our very own Tony is currently going through a prep video. It is live on the website now for anyone.
You also have the expected move to the upside right here. This is about 456.46. Does not take into consideration any of the implied vol from 0 dates being bought in this market. We usually have a failure. Have a failure here where before repricing. Same to the downside, the initial downside move. You'll sometimes see a failure as well. Trying to clean out, thank you for playing kind of stuff. We have the hourly trigger right here. You know that if price can squeeze above the hourly trigger, but you are still looking for a back test of it and price to stay above the 27 and the 130 EMAs. Right now we're looking at a 1-minute chart. We'll switch over briefly to the 5-minute chart, see what that's looking like. Also want to highlight the last 6 sessions. Kind of drew this out, right? We kind of followed that same path down there. Followed this path to the upside, now following the path to the downside. Do we get the squeeze higher from bottoming out, or do we just begin to squeeze higher and head higher here? Does the Fed get super ooper duper bearish and we start blasting down to 446 and 440? There are some indications here that we are due for a correction and that there is not yet a swing trade showing itself on a 30-minute chart at this point. Events can reverse that, of course, but for right now, there is no swing trade, multi-day swing trade for bulls proving itself at this moment. The two yellow lines that you see right here are for the actual presser and the press release and the presser. We're under an hour until Jerome Powell gives Yeah, the bots, we've been fighting them in the background, so we're tracking the bots that try. We have one major issue in the Discord, and that's that it's open and free. So what happens is when you're so if you're a gaming Discord, you're talking about not all gaming Discords, but they tend to attract people that don't spend money. You know, they buy their console, they buy their games. Now, we do have some kids with disposable income. There's that argument there, but not quite like a financial Discords. Financial Discords know that everybody in there is pissing money away. They know that it's gambling, right? So if you're a scammer, you're going to target people with disposable incomes. I know some people think that our followers have $5, but from my experience, our followers are high net worth individuals. I meet these people outside of this stream, and these people have a lot of money on the line. They have wealth, and so scammers will try to go after people with disposable income, right, that want to spend money. So due to us having an open and free Discord, our admins and moderators are constantly working in the background trying to fight three kinds of people, trying to fight off scammers, bots, and wolves that come into the Discord. We're hyper aware of it right now, and unless we close it or make it invite only or a small fee to be in there, it's like just a layer to keep all of these. It's like the extra effort that it takes to be in there. You're just dissuading those people, and it's good that you're not seeing it. So if you're not experiencing this right now, it means that the admins are actually doing their jobs very well. Hot dog, baby. Yeah, David's great, man. Great fucking trader. You can't buy that shit anywhere. I'm sorry, you can't buy this stuff anywhere. Nobody's offering. Matter of fact, I'm not going to name the company, but I read this company put out a weekly newsletter on Saturday. This company probably has 20, 30,000 people paying for this newsletter. Somewhere in there, 20 or 30,000. I was shocked. I showed it to somebody last night, late, and I was like, can you believe this? I was like, this is what they put out on Sunday. I was like, read this with me right now. So we went over and read this thing last night. And I was like, people pay fucking $300, $400, $500, $600 for this garbage. Fucking every month. Like hot fucking garbage. Jimmy's like Joe Donut. Like, I'm telling you, there's bulls out there that are like, please just dump the market. Bulls are like, just please give me a chance. My one 10%, like the devil on the shoulder, is like, they're not gonna let these fucks buy 440. They're going to force them to chase the upside. That's the little devil on my shoulder. It's like, all these fucking bulls think they're getting a fucking all these fucking strokers, all these fucking bulls are. That's the thing about a bull market, right? Is that you're out there and you're like, yeah. You're like, I'm bearish today. Why are you bearish? Well, because I want to buy a dip. Whenever you hear that in a bull market, it's gonna squeeze and you're gonna chase. It's the whole point of a fucking bull run is that you're just constantly chasing. You don't ever get the dip that you want. You're constantly looking for the dip, right? And then you're at a top and you finally buy the top. So we're going to turn that off right there. Your theory is an actual good trader doesn't need to sell a goddamn thing. They should be able to make more money trading than they ever could in subscriptions, and that's why I'm here. I agree and disagree with that statement. The cost and time and money for a good trader to put out things is very expensive. It's not cheap. And then, of course, you get to a point if you're a good trader where, like, I'll be honest, I could just be sitting on a fucking beach right now. So why the fuck am I spending my time with you guys? I'll be honest. So, you know, if there's good data and good, there was two parts to this. There's time, the cost, and then data is not free. Like, matter of fact, I was just looking at data. Yesterday I was on the call with a dev. Data, $15,000 a month. Who's footing that fucking bill? And then you've got people like David, and you got admins putting all their time, and you got to keep them interested. So you gotta like at some point make sure they stay interested, or else it devolves into garbage. You know, there's a bunch of problems with this. I was talking last week with someone about GME. I was using GME as an example. There's like a do-gooder out there, and like the do-gooder is like GME had a do-gooder problem. I tried to explain it. I was in a meeting last week, and I was like, "There's this thing called a do-gooder," and they kind of like, they're not traders, they're not investors. They think they're doing a good thing, and then they break what was a good thing. So Wall Street Bets had a really good thing going trading trading GME, and then do-gooders told everybody, in my view. And then, of course, the sharks came around, and then, of course, they broke it. You know, the sharks broke it, and because too many people knew. So there's that, and then there's some other issues too. There's issues of if it's free, people don't value things. People's psychology, believe it or not, like a human psychology is if they pay for something, even if it's cheap, it's more valuable. Another fascinating thing too is our chat here. So here's an example of this. Our chat in YouTube and Twitch became very counter alpha, very destructive due to being free and open. So we charged a minimum fee. I think it was $5 on both, and a free option, but you had to take steps to become able to chat. So like right now you can chat for free with us, but you have to take steps. Like you have to go to Amazon, subscribe to Prime Gaming to the channel. And what it does is it increases the quality of alpha in the chat. So not everything free is actually good. Let's start with that. Not everything free that you get is actually good. So I used to think the same thing that you think. And then I realized that's not really true. There's like parts to this that are not true. There's like caveats or a gray area or something. So you need to like get out the bad alpha in the chats. You can't have the do-gooders running the show too, right? So you have too much of a mix of do-gooders, and they actually break what you're trying to do. So GME was a classic example of that. You get people that understood what was happening, people that understood when it was going to break, and then once you get overrun by, you maybe have 3,000 people, 5,000 people, and then you get 100,000 people that rollover of people attracts and breaks what you're trying to do. Believe it or not. So it's like counter to what you think you're doing. Counter to what you think you're doing. There are other examples of this. There's a trader on FinTwit. Some of us know. I'm not going to mention her name, but she released a cool thing publicly, and it was broken in a month because it was free and open to everybody. And then you attract scammers, wolves, all these other fucking monsters out there. So there's an issue with that too, right? And then you've got the cost of what you're doing. And when it's small, when it's like a small group of people, if it's like you and your friends, like me and like 5 of my friends, or me and 100 of my friends, that's one thing. That's cool. It's cheap. It's free. The data doesn't cost anything. The time doesn't cost anything, and you do what you're doing. But when you start to scale this stuff to help for free people out there, it's hard to stay open or free to some extent. Not fully, just to some extent. So, and then you want it to continue on, right? So, like if you're trying to do this day in, day out, over the years, you need to attract people that will continue doing this and then keep them interested so they continue to provide data. And then the services all cost money. Like all this equipment in here costs fucking bank, dude, like serious money. And we wouldn't be doing this if we didn't have people donating to the stream. I got like 15, 20K in here. And that doesn't count any of the broken shit that's broken over the years.
Reverse repo facility.
That's a whole nother cost. And I think at one point it was costing me every month, and just services. I think every year was
sponsored by
15 or 20K.
TickStrike allows you to actually hear order flow in futures, forex, and stock instruments.
So the entire thought that if you're a great trader, it should be free. It holds weight to an extent. Like if you're fucking around on FinTwit and just posting, hey, we're going up, hey, we're going down, I agree with that statement. But I don't agree with it as it grows, because I know that I'm feeling the pain. My wife is pissed off at me. It's like, hey, 300 grand, what are you doing? I'm like, I'm like, I don't know what I'm doing. We got to shut this shit down or make it self-sustainable. That's the only answer she wants to hear. You got to shut it all down. And that's kind of where we are, right? Yeah. We're at that point right now. We're actually in the background, stuff you guys can't see.
Parties are taking $1.75 trillion at the Fed's reverse repo operation.
Stuff that you guys can't see is we have to constantly be trying to have an edge that no one knows about and roll that stuff out over time. We have to constantly be trying to fight losing the edge, and we have to make it self-sustainable. And if it doesn't become self-sustainable, it just goes away. So you have like a flag waver out there saying, that statement that was made. But yet that person waving that flag probably doesn't know that two things. One, that those things eventually go away. They just shut down and go away. And that flag waver typically will go somewhere else to the next thing, right? To the next thing they can find that works for them for free. So they have no skin in the game. They have no care if it goes away. You get what I'm saying? So if you understand that out there, then you do. If you don't, you don't. You just go from thing to thing, one thing to the next thing to the next thing. Yeah, good job there. Tony Cheese just said Mr. Yen put out a post, ended it with, I'm feeling higher, baby. Good luck. So Mr. Yen is bullish here. I trust Mr. Yen. So thanks for posting that in the chat. We'll see. I've got calls, man. I bought some calls at that bottom yesterday. We'll see if they print today or not. So we start squeezing higher. I think the Bulls have that one good thing going for them. That's rear view mirror. Rear view mirror is a powerful fucking thing. Powerful. Yeah, I like Mr. Yen. I used to watch him all the time. He is I have a lot of trust in him. He's a fucking one of the best like day traders on live stream period of all time. He is the fucking goat. He is the man. Yeah, there's a reason for it. It's not always profit driven. Why they do the Discord, it's not really profit driven. It's just time, effort, cost. There's no need to do it. There's a guy out there. His name is Derek Kotnoy, and he sells a newsletter every month, and I fucking love it. I think it's awesome. I like the time that he puts into it. There's another guy, Chris DeMarco, puts a ton of information out. There's another guy out there, Matt Ryan. J-Roll does a great job. He makes millionaires. You guys can go on my Discord and make $1 million. So, that shit is free, right? You got another guy out there that I trust. You got VolWiz, Scott. The guy puts, you go over to ask Scott, say, how much time do you put in your newsletter? I think he charges $20 a month. I got no problem paying that for Scott. So Volatility Wiz does a newsletter. That guy puts a lot of fucking time into what he does. The guy's a professional. Guy comes from a hedge fund background, and he takes the time to put out a newsletter every week. I got no problem paying that guy. None. You guys all out there, you guys want to see, you guys pay for Spot Gamma. You guys pay for Flow Algo. You guys pay for Bookmap. You guys pay for fucking Trading View.
Heads up in
you guys pay for more shit than I can count.
I'll due to get the Bank of Canada.
You guys all out there saying you don't pay. You guys do. I know you guys pay for all that stuff out there. You guys paying for Trady Tick and I don't fucking know. You can name them all. There's a whole bunch of those services out there. You guys pay for them all. And the ones that don't, I don't know. If you're making that much money, then what are you sitting in my stream for? I find mostly it's people trying to get it slide by on the cheap because they're not making money. That's my suspicion. Because I've paid for services all these years. I pay for them because they help. They help me to make money. If you're making money, you don't care about the cost of services, in my view. Hey, Stacy, what's going on? I should have said Chris DeMacro. I should have said Chris DeMacro. I shouldn't say Chris DeMarco. And I probably shouldn't say, what's the other one that I said? Do I say J-Roll right? Do I say James Rowland right or not? Maybe I said that one wrong too. And sometimes I say Matt Ryan too. I don't say Matthew. Yeah, there's another one, right? You've got Unusual Whales. You need an edge. Edge is a fucking hard thing to get. Edge is that's the thing, man. So we were talking about the Discord the other day, and I was speaking with some admins, and there are some people in the Discord that are trying to run EMAs without an edge, and they're acting like they got an edge and they don't, and it's kind of bizarre to watch. And I'm like, okay, whatever. Having an edge is not an easy thing to get. Forget about management and patience and emotions and not waiting for the right setup. Just having an edge is a hard thing to get. Oh, you do pay for the Elite Fund Strat with Tom Lee? I was about to join that one, believe it or not. I have been thinking about it for the past 2 weeks, so maybe longer, 3 weeks, something like that. I was going to actually join that program with them with the Fund Strat. So it's on my list of things to do. Yeah, Bookmap. I was paying $700 or $800 a month for it at one point. I gotta go potty. The other thing that I don't do is I don't do sponsors either. I should have done sponsors, but I don't like I don't like. Well, I don't mind. Maybe I'll do sponsors. I have to like the sponsor, believe in the sponsor, and who else? I don't know who's just said Beartown Sheriff said something about no edge. Like, I can't believe the services that give you like the up, the down, the sideways with no conviction. I think that's a rare thing too. Is even if somebody's wrong, like I like people with conviction. Like we're going there, we're going there. I don't care if they're wrong. I'm paying for conviction usually if it's someone giving me their insight. I don't really care if they're wrong. Yeah, it's not the same version. So you guys don't know some of this stuff. So like the Thinkorswim book map is not the same book map as paid book map. It's not the same data. It doesn't offer the same tools, and it doesn't offer the same functionality. Thanks, Stacy. All right. Just sitting here. Parking price right now for the decision. We have 35 minutes left until the presser. These all seem to play out the same way.
So according to Xinhua, China's Wang Yi says China's ready to enhance mutual strategic trust and deepen cooperation with Turkey. And
Yeah, I
5
think I'm
minutes away now
gonna
to
go
get the
pee
Bank
real
of Canada
quick. I'm gonna go
meeting minutes
potty.
for the July meeting.
I'm going to go visit the restroom really quick. Give me 5 minutes and I'll be right back.
1 minute remaining till we get the Bank of Canada meeting minutes.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
10 seconds. So the Bank of Canada's Governing Council debated not raising rates on July 12th and waiting for more evidence to solidify the case for another hike. Bank of Canada minutes says the Governing Council members agreed that they were prepared to raise rates further if needed, but did not want to do more if they had to. So the consensus among members was that the cost of delaying action was larger than the benefit of waiting. The Governing Council, encouraged by the drop in CPI inflation, but core inflation measures suggest the return to 2% will take longer than previously forecast. Bank of Canada minutes says the Governing Council felt the data clearly indicated that excess demand and elevated core inflation were proving to be more persistent than expected. The Governing Council was concerned the progress towards price stability could stall and inflation could even rise again if upside surprises materialize. The Governing Council agreed consumption should moderate as higher rates take effect, but this moderation will take longer than previously anticipated. So the Bank of Canada minutes says the Governing Council felt it was too early to tell whether wage growth was easing, and the Governing Council discussed the scenario where monetary policy needs to be more restrictive. Another scenario focused on longer than usual lags in transmission of monetary policy. And excess demand, inflation expectations, and wages are key to the Bank of Canada outlook. Bank of Canada's meeting minutes says officials agreed rate policy is not restrictive, sufficiently restrictive, and officials agreed incoming data should influence future policy decisions. So again, officials agreed rate policy not sufficiently restrictive.
Coming right back right now. Give me just a second here. Hey, STT Voyager. Right on, brother. Love you too, man. Appreciate it. All right, here. Oh, hold on a second. I got to put that chat box back up. Can't wait, man. Dude, this thing is I'm so stoked right now. We're doing a bunch of work here in the background. Everything's looking good for the website.
And we have posted the Bank of Canada meeting minutes for the July meeting on the feed for all those interested.
S2 down below at 452.47. Sitting on S1 right now. 134 in the afternoon. A little bit of a rug pull going on in the S&P 500. VIX rolling over right now. HYG heading higher even with this dip right now. Dixie quite bullish right now. NASDAQ trying to confirm a leg lower on a 5-minute chart. Apple rolling over right now. IWM with a roll as well. A divergence right now between HYG, which would imply, or a forward-looking indicator, a divergence on HYG right now to the upside, even though price is lagging in the S&P 500. Trying to set up a trade here right now. Remember that we talked earlier about the reaction trade usually being the best trade. Man, so right now I'm looking for this trade right here. I'm looking for this, like, even if this is a false breakout, something like that into 230 and then a fucking ripper up here. We're on a 5-minute chart right now. I'm going to switch to a 1-minute chart because I need to be able to buy the tick.
The Canadian dollar weakens to an 8-day low at around one spot 3237 per dollar. That's down around spot 5% on the day. As that's following the release of the Bank of Canada's summary of deliberations for their July policy meeting. As again, a key comment that was said in there is that the Governing Council was concerned that the progress towards price stability could stall and inflation could even rise again if upside surprises materialize.
Yeah, I've got a bunch of 459s that I started loading up on yesterday. I've got a 455s that I'm looking for right now. They're 89 cents right now. I want to see them at like 40 cents if possible, maybe 30 cents. And then I've got a bunch of 432Ps for the 11th and 420Ps for the 11th. I think those are both fucking dead at this point. Yeah, I got 459Cs, 432Ps, 420Ps. I'm buying those all the way up. The only time I haven't bought on the way up any more puts is this last rollover that we had. And trading the market up along the way. What's your question about Meta earnings? I'm bearish on Meta earnings. I want to see Meta come down at 242. I'm like bullish on their guidance, but I'd like to see it dip down at 242 to buy on Meta if possible. Will the threads revs be? You know, it's weird. Like it's like threads. I keep reading the news articles on that stuff. I finally read an article that they're going to try to do a desktop version of it. I don't really do too much on my phone with like Twitter. I rarely post on Twitter from my phone. I don't like being attached to it. If I'm like sitting in front of a desktop, I'll post, but until threads can get, I signed up for it.
So we're under 20 minutes away now to the top of the hour. We do get the headline event for the day, which is the US interest rate decision. So the, again, medium forecast expecting a 25 basis point hike up to 5.5%, as this is almost unanimously expected. To also get the FOMC rate statement as well. So for anyone interested, we've just posted out a prep article. Did post this out earlier in the morning as well. Just thought we'd post this out again for you. Just goes over some investment bank views on what to expect for this. So just going to go over some of these now. So ING, again, with the rest, forecasting a 25 basis point hike. And they comment that the Federal Reserve is set to resume its policy tightening today. Inflation is moderating, but remains well above the target. And with a tight jobs market and resilient activity, officials may feel that they can't take any chances. So the Fed will continue to signal prospects of further hikes, according to ING, but with the credit cycle turning, ING doubt that it will carry through. So after 10 consecutive interest rate hikes over the previous 15 months, the Federal Reserve left the Fed funds rate unchanged at the 5 to 5.25% range in the June meeting. While it was a unanimous decision, there was a hawkish messaging in the accompanying press conference and updated Fed forecasts released in the SEP in that meeting, signaling a broad consensus behind the idea of 2 more rate rises later in the year. So just away from the ING piece, now this has been signaled by multiple Fed officials before the blackout period, Waller being one, expecting 2 additional 25 basis point hikes this year. And so back to the ING view ahead of the US interest rate decision. So ING notes that Fed Chair Powell had previously stated that the long and varied lags in monetary policy meant that the decision should be interpreted as a slowing in the pace of interest rate hikes rather than an actual pause with regards to the pause at the June meeting. So while inflation is moderating, it is still far too high, and jobs market remaining very tight, Fed cannot take any chances.
Just wanting to bring your attention over here, this bar that just popped up. This bar just popped up just recently right down here. See these buyers sitting down here. Smart money down here just waiting. $17 minutes to go. I'm not bearish on Meta. I shouldn't say, like, I don't want to sound like I'm bearish. I don't like the idea of momentum leaving Meta right now. My thesis here is that, or Facebook, I should say, I don't think I could ever call Twitter X, by the way. I don't think I can do it. It's sitting on its daily trigger right now. Looks like the dip was bought on Meta at 130 for a move higher. I like the buy that took place on the 24th, right? The dip was bought on the 24th. The daily velocity, though, is counter to Meta right now. There's a lot of velocity leaving Meta right now. So underneath the surface, now if Meta were to trade above 302 at the close today and hold that number, I'd be bullish, maybe buying the underlying. But for a discount, I would love to buy 242. I'm not necessarily like not bullish on Meta. It's just buy here, probably not. I do like the buy that took place, though, on the 24th. I'm going to check ES really quick. Hang tight here. Check SPX. Yeah, like I can't do Alphabet. I can't do like Twitter. Like he said, what did he call him? X something? Zeets or something? I don't know. I can't do it. Maybe I can at some point. It's wild to watch the destruction of Twitter. I find it fascinating. Just the property and all, like the verbiage, the iconicness of it. It's like taking Coca-Cola, right, and just saying "fuck it," we're getting rid of it. So it's wild to see, to witness. Not gonna lie, it is wild to watch. You can rationalize it all you want. It's wild to watch. Do you guys have any other examples of that? Maybe. I don't know if there are any more examples of that. We're gonna watch these ticks a little bit closer here. You guys prefer the zoomed in look? I can move this up and down at 2:30 or 2 p.m. Or do you prefer to watch it a little bit closer? Let me know in the chat if you guys are long for a squeeze at 2 p.m. or if you're waiting to buy a reaction or sell a reaction, something like that. I've got some calls set up here to add, but I haven't bought them yet. I only want to buy them if we get a push down here. I'd like to see a push down here and then grab some calls, some add to my position. And I can leave it here for you, or I can zoom in if you want. Thanks, Follow Blanca. Yeah, please hit the like button. Please hit the subscribe button. Please follow me on Twitter. Google search CaptainJimJames on Google. You'll be able to find me. Let me know. Matter of fact, I don't know if I have time for that right now. Maybe at the end of the day, if you don't have any followers on Twitter, if you got like 5 followers or something, I will follow you. So we can do that end of the day. What we'll do is I'll get on Twitter, and if you need somebody to follow you, I will follow you. Hey, Random, thanks for supporting the stream. Appreciate it. Yeah, it's weird. It's actually more watchers than 400. So it's kind of weird. Like YouTube intentionally does not show my actual watchers right now. They don't show me until end of the day. So at the end of the day, they come back and tell me I had like 2, 3, 4,000 watchers. Really bizarre. It's like I think from what I was told is that from what I was told, is they won't show you how many people are actually watching the stream in case you are doing something nefarious like committing suicide or committing a crime
FOMC rate statement.
on live stream
So for the US
specifically.
interest rate decision, median forecast sees a 25 basis point hike to 5.5% from the prior 5.25%.
It's really wild. So like if you're live streaming, they will not show how many people are actually watching on the front end.
Some analyst commentary ahead of this U.S. interest rate decision. So comments from BlackRock. So they say that the Federal Reserve is set to hike rates again this week, yet markets have been taking this in stride. They note.
Yeah, can I do Tesla?
So BlackRock says that soft June U.S. core inflation has revived hopes for rate cuts next year, and this can fuel a bull run across assets for some time. BlackRock do note that until it runs into some disconnect between fast falling inflation and stronger than expected economic activity.
So just a note on Tesla here.
Also just seeing some comments from JP Morgan's Dr. David Kelly regarding this rate decision. So he says that both parts of the Fed's mandate continue to trend in the right direction, and JP Morgan expect the Fed to hike another 25 basis points today. So they say that the market clearly agrees and is pricing in at the time of writing their piece a 96% probability of another hike. Let's look into the CME FedWatch tool now, still showing around a 98.9% chance of this. So JP Morgan's Dr. David Kelly does say that regardless, the end of the Fed hiking cycle looks closer than it did earlier this year, with this week's chart showing that the market expects no further hikes for the remainder of the year, assuming we get a hike today. However, he does note that the market appears too pessimistic in its outlook for rate cuts, with only one full cut expected in the first quarter of next year and a cumulative 125 basis points of cuts for the year in general. So the Fed often raises rates on an escalator before being forced to take an elevator down, with rates falling on average 275 basis points within the first year of cuts, Dr. David Kelly notes.
So I will chart Tesla for you later, but nothing has changed with Tesla. 262 is the bottom for Tesla right now, though I think it comes down again and still sees that 222 that we talked about the other day. Now, if we get a positive Fed,
of course, that JP Morgan had to buy almost $2 billion of mortgages in the PacWest deal.
You could still see a retracement, mean reversion, halfback trade on Tesla up to 277 and even 290. Random. I will chart this out for you after the presser. I will do that for you by end of day. If you want me to, random, you could find me in Discord and send me a DM, and I'll also send you those charts as well. Tesla currently sitting on its daily trigger. I personally do not like buying with size on Tesla with where we are right now. Watching liquidity leave the marketplace in anticipation. 7 minutes until the presser hits. If you are watching on YouTube, YouTube natively delays live streams. You can hit the cogwheel as we get closer to 2 p.m. and hit the speed up button. I'll sound like really weird to you. You can hit the ×2, and you will only be a minute or 15 seconds behind an actual live stream. If you ever want to watch a live stream, the best place to view it is always on Twitch. They don't have any native delay like YouTube does. I will adjust the screen. Hopefully we can see the hedge come off the market as we get close. Yeah,
So we're
J
now
Powell
5 minutes
comes
away
out
from
today.
the top of the hour and the headline event for the day with the US interest rate decision. A median forecast sees a 25 basis point hike up to 5.5%, of course, from the prior 5.25%.
You've got J Powell walks out
So
today,
after this,
right?
you get the FOMC rate statement, so that'll be coming out with the interest rate as well.
Mission
So
accomplished.
just going
Drops
over
the
some
mic and
views
walks
ahead
out.
of this release. This time a review from Wells Fargo, who, like the rest, also forecast a 25 basis point hike. So they say that when the FOMC last met on June 14th, the committee had left the Fed funds rate unchanged for the first time in 10 meetings. However, Wells Fargo noted that the FOMC signaled that its tightening cycle was unlikely to be over at that point, and the dovish policy decision was delivered with a hawkish message via the summary of economic projections, which showed that the median expectations of where the Fed funds rate would end this year was 50 basis points higher than the prior quarterly SEP that was released in March. However, with the FOMC having raised rates 500 basis points in a little over a year, the committee believed it prudent to hold the policy rate steady in the month of June in order to assess the additional information on how the economy was weathering in the cumulative and lagged effects of policy changes. Wells Fargo does also note that markets appear braced for the likelihood of further tightening in the month of July. So that's with this meeting, with futures pricing in at the point of Wells Fargo's note, 96% probability of another 25 basis points increase. They do note, however, that doubts linger about whether the committee will go through with the subsequent hike later this year. The odds of their target range reaching 5.5 to 5.75% this cycle currently stands a little over 40% based on the current Fed funds future, again at the time of Wells Fargo writing their note. Wells Fargo also adds that they have their own doubts about whether the FOMC will deliver another hike in its July meeting. The pause in June signals a significant number of officials are quite wary about the lagged effects of policy tightening undertaken already. At the same time, Wells Fargo expects to see the trend in core inflation continue to ease over the next few months,
yesterday, actually.
which, when combined with more sluggish spending, investment, and hiring, will lead for the committee to settle in an extended
I did
pause.
Hood yesterday. I did get around to it and did actually review Hood. Here we go, baby. Say it in the chat. Are you bullish or bearish? Are you hawkish or dovish? Let your freak flag fly inside the chat here. Sell it. Bullish as fuck, baby. B4 Duck 1. Oh, wait a minute. Hold on. I'm trying to read some of this stuff. Winky Face, don't care, not trading events anymore. I'm with you, Winky. I'm uncertain with a small call position. Loaded to the tits. Bull. 456, 460. Hawkish. Like, what does VIX mean? Let's kill the VIX, baby. May the force be with us. Did a lot of fucking bulls here today. Oh, you guys want me to set up the music today? I'll set the music up. Hawking it, Ramesh. Yeah, we'll look at Hood later today, too. I'll bring it back up for you to look at Hood. Hawkeye McHawkish. Beam the bitch to space with our alien friends. Yo, yeah, I got bull and bear music here for you.
And rate statement.
As long as our JR Capital is bearish on bulls. Oh, man. Bullish on danger, Snow. Fuck yeah, baby. You'll be bullish when they dump it. That's what I'm looking for. I'm like, oh, man, just give me that fucking fast bloodbath down so I can buy that shit. Like, just give me that fake out down here. Supposedly the aliens are bullish right now. Long duck dong or short round. Get your popcorn ready, baby. You gonna try both sides? Whoa. 1 minute left.
hike 25 basis points, hike 25 basis points, hike to 5.5% as expected. So seeing the Fed here, they're saying the banking system is sound and resilient. The Federal Reserve raising the key overnight rate by that quarter point as expected. Will continue to assess additional information and its implications for policy. The Federal Reserve Federal Reserve says inflation remains elevated and policy setting committee remains highly attentive to the inflation risks. Fed says it will continue to assess additional information and its implications on policy, and adding that they are strongly committed to returning 2% inflation targets. Fed does add that it will continue to reduce its bond holdings as described in the previously announced plans. And Fed says the recent indicators suggest that economic activity has been expanding at a moderate pace versus a modest pace. That was said in the June statement.
Yeah, that's a change there too. Change in the growth. And
Fed also says that tighter credit conditions are unlikely to weigh on economic activity, hiring and inflation, the extent to which remains uncertain.
No change in open to rate increases.
Change, it was unanimous.
No change in verbiage on the press release.
Saw in the S&P 500 and some weakness emerging in the dollar.
We strengthen HYG right now. Strengthen Apple. Strengthen IWM right now. Just a note on that dollar weakness. It's coming down to retest its 5-minute trigger on 27 EMA.
FOMC rate statement from the prior report there. So the only change noting here is that the recent indicators suggest economic activity has been expanding at a moderate pace. So the language used in the last report was a modest pace. But for anyone interested, we have put out the full FOMC rate statement on the feed.
That has changed at this point. HYG is just ripping face right now.
Strength in the S&P 500. It's just pairing some of its gains, so it's up around down around spot 4 on the session now.
Apple showing strength right now.
U.S. interest rate futures put the chance of a Fed hike at 18%
Tesla showing strength right now on 264
in November as well after that statement.
I think you're just waiting on Dixie to see what its reaction is.
Putting the chance of a Fed hike in September at 18% and 36.5%
HYG ripping faces off right now. Going back to retest its previous high.
And U.S. Treasury yields are dipping after the Fed rate decision there. 10-year yields lasted around 3.811%. Sorry, that's 3.881%.
This stream is sponsored by TickStrike. TickStrike allows you to actually
looks like the market is waiting on, just a heads up out there, it looks like the market is waiting on a recheck of Dixie right now. Dixie's coming down to test 101.22. You'd want to see that rolling over effect on Dixie for the market to start to explode to the upside. Watching some
percent after that. And in November, it was 37.3%. It's dropped now to 36.5% after this statement.
Watching a repricing right now in the options chain. So your first option or event vol kicking off this right now. No, that's the one key here. One thing that did not change.
4.883% after the Fed. So the 2- and 10-year curve inversion lasted minus 101 basis points.
So one thing that I've in this press release that did not change was pause with an introduction of language of no further rate hikes planned. So that did not happen. So you have similar language to the last press release where the Fed is still open to more rate hikes down the road. Now, in the presser, you're going to be looking for Jerome's statement on how soon they're going to expect or consider another rate hike. Is that September? Is it December? Is it next year? That's not quite data dependent either. So that's good for bulls, believe it or not. It's not bad for bulls. I know bulls will take that as negative, but it is not overall negative for bulls. The longer that there's a threat of raising rates, even if they do not, keeps this market alive historically. The moment they actually cut rates or leading into the cutting of rates, you will usually see the market front run a significant move to the downside. I know that's counter to what you're told on FinTwit.
So again, just reading into the Fed statement here. So it did say the Fed are to consider the extent of additional firming in order to curb inflation.
Yeah, you usually see a big ramp up into into pricing in a rate cut, or if it's unexpected, an immediate drop. So right now, that opens the window to bulls overall for the bull run to continue for a longer length of time, actually into 2024. So positive overall news and a higher time frame for bulls, believe it or not. I know you don't want to hear that, but that is the case. You might get a rollover here. You'll still likely tag the upper and lower end here. You'll still likely hit these today. Event vol rolling off though. And the Fed has been more open with their decision making. So we actually, to prove that point, you saw the market roll over before we got rate increases. Jerome Powell went public and said, we're not going to do any surprises. We're going to tell you guys everything. And so you watch the market roll on spec growth and other sectors. Then you saw the rollover in the indexes in 2022. All of that was front run. You'll see that same front running take place, or you're anticipating that same front running to take place once they do finish with their rate hikes. So as long as they threaten, even if they give you a pause, as long as they're threatening the possibility of more rate hikes, that will extend the potential for the bull run to be over. Now, even if you had weakness today or a correction, still doesn't signify that major rollover that's going to retest the previous lows that were at one time at 34.50. Yeah, I like that idea. I like it. I like it. Fed's working on inflation, baby. I'm taking this as a positive. And we're still watching Dixie here in the background to see what its reaction is. We now have the presser. I'll have the presser live for you here in just a moment at 2:30. I've got it on right now in the background for you, so we'll have the presser up for you live. One minute chart's getting bullish right now. 30-minute chart, not looking for anything extended at this point. any kind of extended multi-day move at this point. Trying to break above the hourly trigger right now, try to form that cluster. We have a bull plane forming right now with a bull cluster on the HT.
So this is an early heads up in under 20 minutes time now. Do you get the FOMC press conference following the rate decision there? With
See if we get a move there,
live
and then
videos available on
possibly
the
a
feed
move
now if
here,
anyone
and then a
interested.
move up here before 2:30. Be careful me charting that for you right now, because once we get close to, we only have 20, not quite 20 minutes. We got like maybe 10 minutes left. You could be getting bullish right now, and then as we get closer to that presser, they'll roll it down on you due to the presser volatility that's ahead. So this is a bullish setup right here, but I don't think it's anything that is sustainable, if that makes any sense to you. There is a bull cluster forming, not confirmed. And even if it was to squeeze, it would need to confirm. And that is where the long is right there, believe it or not where it is currently. I guess I should say there's like a quick 3-minute or 2-minute play here to the upside, but not something that's sustainable. Tesla making a move to the upside. HYG bullish as fuck. Dixie getting annihilated right now. That's good for bulls. Apple, NDX moving to the upside right now. This red line is when the presser begins. I'm going to move it slightly over to 425 just so that we have a warning sign. And we have more vol entering here. Bullish day trade and 1-minute chart. Bullish at the moment. $4.55s were pretty steady around 80 cents. They dropped 89 cents and they dropped to 72 cents. Now trading $1.13. You're craving candy right now? You know, it's like, so my wife buys expensive caramel chocolates, like these small, like Swiss chocolate bars, and nobody liked them. Now my youngest loves them, and I don't eat them. She keeps them in a freezer for me, a little mini fridge that I have, and I haven't been eating them, but they've been just stacking up in there. And so I went over to the freezer yesterday looking for one, and they were all gone. So the culprit is likely my youngest daughter. And I remember being a child, and my father would progressively over the years consume shittier things so that kids wouldn't eat or drink at all. I remember turning like 21 years old, and we would have friends over all the time, and we started drinking my dad's beer. And so my dad would like start getting worse and worse flavored beer to deter my friends and I from drinking all of his beer. And so I feel like I'm in that phase right now with my youngest. I have to find a candy that my youngest will not want to eat. I kid you not. Your old man did that too? Yeah, exactly. It's like my dad started drinking. Like my dad had plenty of money, upper middle class, and switched to like Milwaukee's Best. I actually remember that label to this day, and we were like, "This is nasty shit." And then we would start to we started to figure out what he was doing. And we used to joke around that we were like, someday he's just going to start buying like Old English 40s and Mad Dog 2020. But we had already learned. We drank all the slow gin when we were underage. We'd raid the bar and we'd drink the shit that nobody drank, like slow gin. I don't know if any of you guys ever drank slow gin. Man, like nobody drinks that shit. So we were in there pounding the slow gin because it had dust on it. Probably would have killed us too and didn't even realize. Probably sat in there for like 20 years. What's that stuff that rotten fish that you get from like from Sweden and Norway? Like get some of that canned rotten fish and put a chocolate label on it or something. Do you guys remember doing that stuff? You like go inside your parents' bar and you're like, okay, someone just said they mixed the liquor, right? And then like you pour a bunch of it into like a glass with your friends, and you're like, they'll never know, man. They'll never fucking know. And what's really bizarre is some liquor bottles have little tick marks on them, but it's just like a mark on the bottle. Your dad didn't make it, but you're not sure if your dad made that mark or not. Yeah, sure, Straubing, man. That stuff is nasty. Nasty. Super nasty. No joy right now for call or put buyers. Theta Gang rubbing their hands together right now. Theta Gang's like, woo! So much vol expected at this event. 1% expected at this event. Up or down, baby. Call and put sellers right now, rubbing their hands. They're lubing each other up right now. Call and put sellers, man. Fucking A. They're right now, a put seller, a call seller is at home right now laughing. They got people on FinTwit saying, they got the options market saying expect a 1% up or down move minimum. If not, we'll get the 1% to 2% up down move. And right now, there's this call seller out there and a put seller, and they're like high-fiving each other. Fuck yeah, baby. Bunch of put and call sellers out there feared right now in the buyer's market. Shitadel, the only ones making money today. Bulls and Bears resting their hopes and prayers on Jerome Powell for the upside move and downside move. Dixie telling the story for the Bulls right now. Dixie did roll over, so behind the scenes, you've got HYG trying to confirm an upside move. You've got some failure right now in Dixie. You got the VIX dying right now. Get ready for a squeeze, baby. Almost there for a squeeze. Strap in, buckle
10
up.
minutes time now, the bottom of the hour. Do you get the FOMC press conference with Chair Powell? The video to watch along live is on the feed.
Sellers. Are you gonna take off the hedge here? This is like a standoff between sellers, sell side hedge fund. They're like, please, 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 just have the conference so it rolls over. Slam down those green candles. Slam down those green candles. Just trying to pin this into 230 so we don't get that giant squeeze, that face ripper. You only got much time left. 10 minutes left for a squeeze. Come on, baby. Oh, yeah, these fucking sellers are like, they're like, do we hold here? We just gotta get to the presser. That's all we have to do. We just need a few more bars here. Just a few more slam down bars and lock these bulls in. VIX trading 1372, trying to close a gap. Down to 1362. Dude, these sellers are revenging right now. They are pissed off. Pissed off sellers right here. You gotta go out there and scream at those sell side hedge funders. Take the fucking hedge off. 8 minutes left until the presser. Oh yeah, I gotta get the music going. Hold on here. All right, I got the music up and ready to go. I'm going to go with Bulltown music. And I'm going to tell you why. I've got the Bulltown set up. I'm going to tell you why. There really isn't anything in that fucking presser that Jerome's going to say that's going to make this market go to the depths of hell. You might get some vol out of it, but I can't foresee anything. You didn't get your 50 BPS. You didn't get definite rate hikes coming. You got the threat of it. Yeah, if you're a bear out there, you better be crossing your fingers because you need Jerome. It's all you got there, and I don't see it. So hopefully you can get out of your short. You know, there ain't much here for a bear. There's not a lot of meat on the bone. You lost the first presser. It's only a matter of when do we go up at this point, in my view. So you better be praying for bear pow in full effect. Start saying your prayers here. Yeah, bears don't have a lot, or sellers don't have a lot going for them right now. They needed to win that press release. They didn't win it. And they really need full bear Jerome talk the market down kind of shit. They basically need Powell to come out and say expect a rate hike and expect a surprise rate hike. Or expect a rate hike in September. That would do it too. I got 6 minutes left. If you're a bear, that's what you need. You need like some kind of like expect a rate hike in September. You need that kind of verbiage. Not just Jay Powell trying to talk the market down. You need that verbiage. 30-minute is now firming up for a bull trade to the upside. Not quite there yet, but it's firming up right now. I'm going to turn on the presser here in the background. In just a few moments, I've got it playing. There's music playing in the background right now.
So we're now 5 minutes away from the bottom of the hour, where we do get the FOMC press conference with Chair Powell, link to which is available on the feed.
Grovlocks, dude. Effing Grovlocks. Oh, yeah, that lootfish is nasty too, right? Yeah, lootfish, that's some nasty stuff. Yeah, you basically need, Joey, him to come out and say, don't take a rate hike off the table in September. That's what you need to hear. Like, the Bears need to hear two things. Do not take a rate hike off the table for September, and a surprise might be in there for you too. Something like that would trigger it. A little bit of weakness right now in SPY, sell side, able to pin the bulls down right now.
To government shutdown.
Still no new trade for me at this point.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
Yeah, this press release was some of that same verbiage too. This press release with some of that same verbiage was don't expect rate cuts. So that was in this presser. Yeah, left is nasty, man. That's some nasty stuff too. Retesting the lows right now. We got 453.81 down here. 4 minutes left. Ooh, the 1 minute's actually getting really juicy right now. 1 minute's getting juicier, man. 1 minute looks fucking almost prime here. I need that hourly to just come down just a little bit more. Oh, dude, we're almost ready for a face. I should have bought that fucking bar. I should have bought that fucking thing right there. I should have bought that. It's so fucking close. It's ready to fucking rip faces off. Oh, I should have bought that fucking bar, man. That sucks. That pisses me off. 30 minutes, almost there. Almost there. Another couple white bars and it would have been there. It's a nice fucking green bar right there. I missed that fucking thing right there. I was watching some charts in the background. Two minutes left. I'm going to turn on the suppressor music right now for you. When we do this presser, you're sometimes going to hear Jerome speaking very fast, and that's because I want to keep it as live as possible. It's almost as bad as the Tesla waiver music.
The FOMC press conference with Chair Powell to begin, and the live video is available on the feed.
Another note here, as Chair Powell speaks, if he touches on anything bearish, I will highlight it for you as he speaks. So if you hear me speak whilst Jay Powell is speaking, it'll be considered a negative for bulls, okay? Not necessarily rollover, just if he says anything. Here he goes. It's coming up right now. They have the press conference video is now live. Jerome is still not out. Here he comes right now.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a quarter percentage point, and we are continuing to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates. And higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the past 3 months, job gains averaged 244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and
These are all
stable
neutral
prices for the
statements,
American
by the
people.
way.
My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 5.25% to 5.5%. We are also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy rate by 5.25 percentage points since early last year. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back to our 2% goal and to keeping longer-term inflation expectations well anchored.
Seeing
Reducing
the effects of
inflation is
tightening in
likely to
some
require
sectors.
a period of below-trend growth
This is
and
all
some softening of
looking
labor
in the
market
rearview
conditions.
mirror stuff right now.
Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Steve.
So that's pretty forward-looking for a presser there. Was not
Mr.
aggressive.
Chairman, thank you. You have, I think, a couple times in your opening remarks,
HYG
talked about this
blasting
language
off
in
right
determining
now.
the extent of additional policy firming that may be appropriate.
Apple blasting
Should we
off
take
right
that
now.
to mean that additional hikes are likely on the way? And should we also believe that all future meetings, say September and November, are live, or are you in a every other meeting mode? Thank you.
So we haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same question. So we haven't made any decisions about any future
That's a
meetings,
big one
including the
right there.
pace at
That's
which we
not
consider
meeting after meeting.
hiking.
It's every
But
meeting they're going to make a
assessing the
decision.
need for further tightening that may be appropriate. You read the language, to return inflation to 2% over time. I would say that the intermeeting data came in broadly in line with expectations. Economic activity remained resilient. Job creation remained strong while cooling a bit, and the June CPI report actually came in a bit better than expectations for a change. And the June CPI report, of course, was welcome, but it's only one report, 1 month's data. We hope that inflation will follow a lower path it will be consistent with the CPI reading, but we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader picture, and starting with we're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance.
Bull cluster forming right now on S&P 500.
We'll be asking ourselves, does this whole collection of data, do we assess it as suggesting that we need to raise rates further? And if we make that conclusion, then we will go ahead and raise rates. So that's how we're thinking about the next meeting, and how we're thinking about meetings going forward potentially. But we're now mainly thinking about the next meeting. I will also say, since we're talking about it, between now and the September meeting, we get 2 more job reports, 2 more CPI reports. I think we have an ECI report coming later this week, which
Gap
is
being
Employment
filled right now on
Compensation Index.
SPOOs.
And lots of data on economic activity. All of that information is going to inform our decision as we go into that meeting. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say
More
it's
gaps
possible that
here
we would
and
choose to
here.
hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting. And I'll close by saying we've raised the federal funds rate now by 525 basis points since March 2022. Monetary policy, we
Taking a
believe, is
victory lap
restrictive
right now. Just
and
to
is putting
note that
downward
he is
pressure on
taking a
economic
victory
activity and
lap in his
inflation.
speech right now.
If I could just briefly follow up on something you said
Even
there.
on a tough
You said the
question.
data in the intermediate period.
That
it
is a
broadly came
victory
in,
lap.
In line with expectations. Does that mean there's unlikely to have been a change in the overwhelming outlook of the committee that 2 more hikes are necessary?
I'm just going to go back to what I said.
He's being very,
that's the question.
very
We have 8
dovish
weeks
right now.
until the September meeting, and all that data that I recited,
Victory
we're going
lap
to be
time.
looking at all of that and making
Moving
that
up to
assessment
tag
then.
the
And
expected
really,
move in the S&P
we did have
500
one
and fill
good
the
reading,
final
and
gap
of course we welcome
above.
that, but it's just one reading, as
Trading
everybody knows.
450,
And we've seen
six,
this before in the
20
data.
for a moment there.
Many forecasts call for rates for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
Gina.
Thank you. Thanks for taking our questions, Chair Powell. Obviously, you upgraded the language around growth in the statement today. We've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift concerts this summer. It seems like the American consumer is in pretty good shape. And it does seem like growth is sort of picking back up a little bit, or at least doing well. And I wonder, from your perspective, if that continues, if we see
R1 above
growth
at 456.75, 456.84.
well this summer.
You've got the hourly trigger below the 1 in 6,
inflationary, or is
racing
it good news
upward to blast
it suggests
above.
that a soft landing
It's
is more likely?
smashing
Just
R1.
how are you thinking about that sort of trajectory?
Dealers also have 458 as a possibility to go up all the way up to 458.23, believe it or not.
That we've been able to achieve disinflation so far without any meaningful negative impact on the labor market. The strength of the economy. Overall, that's a good thing. It's good to see that, of course.
Coming into a little bit of supply right now, right here. Just be aware of that right there.
That will support activity going forward.
Another level above it, that would be...
At the margin, stronger growth could lead over time to higher
R1,
inflation,
let's
and
see
that
if
would
there's more
require an
above
appropriate
there.
response from monetary policy. So we'll be watching that carefully and seeing how it evolves over time.
Neil.
Thanks, Chair Powell. Neil Irwin from Axios. So, as you referenced earlier, in the intermeeting period,
Chair
soft
Powell
CPI,
just brushing off. Bearish
questions.
questions.
Still strong, but
Get
moderating.
out of here. Victory lap
jolts
time.
in,
Get
but,
our fucking thing. Get the fuck out of my
So, if you're
face.
data dependent, why not pause?
Unreal.
Why not stay on hold? Why not take another meeting off when the
J.
data was at
Powell.
least cutting in the direction you want to see?
Mission accomplished. Drop the microphone.
If you go back to
See ya.
What we're trying to do here, we're trying to achieve a stance of policy that's sufficiently restrictive to bring inflation down to 2%. At the last meeting, we wrote down our individual estimates of that.
Now trading R1, breaking above, looking for 458.21.
So I would say we looked at the intermeeting data, and as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent with expectations. And as a result, we went ahead and took another step. And that's, a labor market that continues to be strong, but gradually slowing.
Oh, yeah, he's fucking victory lapping, dude.
That
Fuck
the inflation
yeah,
report was actually
baby.
a little better than expected.
He hasn't victory lapped at
we're
all.
going to be careful about taking too much signal from a single reading. And, growth came in stronger than expected. So
no 50
that's how we look at it, and
BPS.
so we did take that
A little
step
bit
today.
of negativity, or not even negativity, just the threat of more rate hikes possible. Doing a victory lap right now.
Chair Powell, markets
Nick Timmeros
the
up
median
next.
FOMC participants' inflation forecast from June for the fourth quarter of this year will be too high, given autos and shelter, and that by September that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation progress be enough to hold rates steady from here, or do you need to see below-trend growth and decelerating labor income growth to be convinced that you've done enough?
So it's hard to pick the pieces apart and say, how
Oh,
much of this
dude,
and
he's
how much
victory
of that.
lapping right now,
we'll
baby.
be looking at everything. And, we'll be looking to see whether the signal from June CPI is replicated or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data. We'll be looking at the labor market data very closely, of course. And
This
making an
is
overall
definitely
judgment.
more
It's the
dovish Powell than I'm
totality of
expecting
the
here.
data, I think, but with a particular focus on making progress on inflation.
If I could follow up, last month you said there were benefits to moderating the pace of increases because it would give you more information
That's
to make
right.
decisions.
Nick's bringing up a
Would
good
another
point here.
CPI report like the one we just had in June allow you to at least maintain that slower pace and defer until the fall any decision on whether you need that second rate hike?
So I'm just going to tell you again what we're going to do in September. We're going to look at 2 additional job reports, 2 additional CPI reports, lots of activity data, and that's what we're going to look at, and we're going to make that decision then. And that decision could mean another hike in September, or it could mean that we decide to maintain at that level. And again, the question we're going to be asking ourselves is the overall signal one that we need to do more, that we need to tighten further? And if we get that signal whenever we get it, then, and that's the collective judgment of the committee, then we will move ahead. If we don't, then we'll have the option of maintaining policy at that level. But it's really
with a
dependent
new
so much
high
on the
just
data, and we just
now.
don't have it yet.
breaking above the high on the 19th of July right
Chris
now.
Rugaber at Associated Press. So consumer confidence in the economy is rising,
SPY.
likely in large part because of the declines in headline inflation. You also see wages are also rising faster than prices now after trailing them for a
New
long
high
time.
on the SPY just
How
then.
much are Americans truly harmed by inflation at its current level, headline level of 3%? And with that in mind, when do you put some weight back on the
New
employment
high
side
for
of
this
the
bull
dual
run
mandate?
for SPOOs.
So I guess I'd say it this way. First, it is a good thing that headline inflation has come down so much, because that's really what the public experiences. And I would say that having headline inflation move down that much almost creates it will strengthen the broad sense that
There's
that the
your
public
cup and
has that
handle
inflation is coming
trade.
down, which will in turn, we hope, help inflation
That
continue to move
that
down.
cup and handle trade should give you continuation
So you were really sorry. What your
later
question
in the
was?
week.
Well, I mean, you've talked for many press conferences now about the harm created by inflation, how hard it is for people. So how much of that are we still seeing with inflation now down at 3?
So I guess I would put it this way. We
Jerome confident. Look at him.
I'd
Look
say
at
it
how
this way.
confident he
it's
looks.
really a question of how do you balance the two risks, the
That's
risk
a
of doing
pimp
too much
walk
or
right
doing
there.
too little. And I would say that
You guys see the confidence
we're
today?
coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not, but
Dude,
as
Jerome's
our,
like,
as our
I got a
stances
white
become
suit at
more
home and a bunch of
restrictive,
cocaine and
inflation
hookers. I can't
moderates,
wait
we
to get
do
home and
increasingly
party.
face that risk. But
He's like yelling his strap to the
we
bed and
need
ready to
see
go.
that inflation is durably down that far. As you know, we think, and most economists think, that core inflation is actually a better signal of where
You have a
headline
cup and
inflation
handle that
is
we've been
going,
talking
because headline
about. You're
inflation
going to expect
is
that
affected
to play
greatly
out.
by volatile
Huge
energy and
move
food
to the
prices. So
upside.
we would want core
Expect
inflation
it
to
on
be coming
this.
down, because that's what we think. That's core is signaling where headline's going to go in the future. And core inflation is still pretty elevated. There's reason to think it can come down now, but it's still quite elevated. And so we think we need to stay on task, and we think we're going to need to certainly hold.
Watching a
policy
repricing
at
right
restrictive
now in the
levels for
options
some
chain
time.
once again.
And we need to be prepared to raise further if we think that's appropriate.
Well, and then if inflation were to, just a quick follow, if it stays at 3 or drops even a little bit more, I mean, how much of an increase in unemployment
he's
do you
just
think is
shitting on
acceptable
people.
to
Timurous
get that last bit of inflation? People
started the
are talking
questions
about the
with, are we
potential
still
difficulty
bearish?
of the last
And then
so-called last mile of inflation.
shut down
So,
by J. Powell.
but how
Then
much, again, how
Timurous
much unemployment
pivoted
do you think is
to the
justified to get
previous
down that
statement.
last
So
one
it
point?
is
In the last
a
rate decision,
very
got
positive
all
thing that actually the unemployment rate
bullish
is the same
with,
as it was
J.
when we
Powell.
lifted
It's
off
kinda
in March
hilarious to
22
watch.
at 3.6%. So that's a real blessing, and that we've been able to achieve some disinflation.
The press is upset right
and
now.
We don't seek to. It's not that we're aiming to raise unemployment, but I would just say the historical record. We have to be honest about the
Look at
historical record.
J. Powell
which
just
does
leaning
suggest
into
that
the
when
lectern
central
right
banks
now.
Go in and
He's got his
slow the
purple
economy
tie on.
to bring down inflation, the result tends to be some softening in labor market conditions.
Oh,
And
yeah,
so
you
that
can
is
see him.
still
He's
the
fucking
likely
confident.
outcome here. And we hope that that's as little
Look
as
at that!
possible.
Look
We
at
have
that
to be honest
ego!
that
It's on full
that
day.
is
Looks
the
like
likely
he
outcome.
looks like a
The worst
peacock
outcome
or
for
a
everyone,
rooster.
of course, would be
He's on
not
top of his stage,
to
or he's on
deal
top
with
of the
inflation
stage
now,
right
not
now.
get
Just
it
look
done.
at him.
Whatever the short-term
Exuding.
social costs of getting inflation under control, the longer-term social
Exuding
costs of failing to do so are
confidence.
greater, and that the historical record is very, very clear on
I
that.
can see
If
like
you go
I
through
can
a
see
period
like
where inflation
jets flying
expectations are not
outside
anchored,
right
inflation
now.
is volatile. It interferes with people's lives and with economic activity.
Big
and,
American flag
that's the-
waving
that's the thing
outside.
we really need to avoid and will avoid.
Go to Michael and Kate.
At this point, you say the policy is restrictive, but all year long we have seen growth surprise to the upside, unemployment to the downside, and inflation lately to the downside. So I'm wondering, by definition, should you be restrictive enough right now under these conditions? Do you think you might need to do more? Because I'm curious about what you see as inflation dynamics now. Is the economy still moving in a direction where it creates more inflation? People talk about base effects and higher energy costs, and now we have some large labor settlements. Or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
So I'll just say, again, the broader picture of what we want to see is We want to see easing of supply constraints and normalization of pandemic-related distortions to demand and supply.
There we go. Pandemic-related distortions.
Economic growth running at moderate or
You got
modest
it,
levels
Jay.
to help ease inflationary pressures.
You got it, Jay.
We want to see continued restoration of supply and demand balance, particularly in the labor market, and all of that should lead to declining inflationary
You got it, Jay. You got it,
And
Jay.
what we see is those pieces of the puzzle coming together, and we're seeing evidence of those things now. But I would say
Jay Powell's on that same thing right there, man. Absolutely.
Policy has not been restrictive enough for long enough to have its
Jay
full desired
backing up the
effects.
bull
So we
thesis
intend
right
to,
now.
again, to keep
Jerome
policy
Powell
restrictive until
backing
we're
up the
confident
bull
that inflation
thesis.
is coming down
Transitory.
sustainably toward our 2% target,
Pandemic
and we're prepared
related.
to further tighten if that is
Probably
appropriate.
have done enough
And we
to
think
bring
the
us back
process,
into a
still
normal business
probably has
cycle.
a long way to go.
Long term, extremely
under
bullish
current
in that
conditions,
statement
you
just
are
then.
restrictive enough unless something changes?
Bears
Well, I think
pissed.
we think today's rate hike was appropriate, and I think we're going to be looking at the incoming data to inform our decision at the next meeting about is the incoming data telling us that we need to do more.
Forward
And
looking
if it
right
does
now,
tell us
rear
that,
view mirror.
collectively, if that's our view, then we will do more.
Colby.
Thank you. Colby Smith with the Financial Times. If September is in fact a live meeting, how does that square with the need for a more gradual tightening pace that you spoke of last month in explaining the rationale for holding
these fucking,
the
these
funds
fucking
rate
reporters
steady,
are going to,
at
by the
June
time they get to
meeting?
the 10th reporter, they're going to be like,
A more gradual pace.
we just want to know if you're going to do a rate
go
hike in
immediately to every
September.
other
Tell
meeting.
us because we
It could
need
be
some bearish shit
2
to
out of 3
say.
meetings, right? It just means if you're slowing down. The point really was to slow down the decision cycle as we get closer and closer to, we think, our destination. And I wouldn't want to go automatically to every other meeting because I just don't think that's, I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally
Slow down. He just
judged,
said
decisions.
market or
And so that's what we did.
rate
And
hikes
so
to
I
slow
think
down.
It's possible. I mentioned before. It's possible that we would move at consecutive meetings. We're not taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
So we shouldn't assume that every other meeting is the lowest tightening frequency, let's
So
say.
I'm going to interject here really quick. I want to say something to you guys here. I don't know if you read
I think
between
we're
the
gonna- look, I
lines
think
here.
We're going to make a decision about the next meeting.
So
and
we've
then we're gonna
said this
make a decision
before.
about
We said
the
it
one after
before
that.
today.
And,
3 days in a row. We've
it'll sort itself out.
nonstop. You're getting a forward-looking Jerome Powell. You're getting a Jerome Powell saying that this is all due to a secondary business cycle. That what the work that we've done has been to rein in that secondary business cycle. The market has repriced itself. He's also being very savvy right now and saying, sorry, we're not going to commit to a set cycle of rate hikes, but they are open on the table. We need to see the effects down the road. Now, what that does is say 2 things. 1, job well done. 2, no, we're not going to roll this fucking market over on the expectation of QE or rate cuts.
And it's not clear that it has.
It's saying, party
I'll tell you
on.
what we know and then what we don't know. We know that financial
I shit you
conditions
not,
affect
that's what it's
economic
saying.
activity and inflation with a lag that can be long and variable, or lags, plural, that can be long and variable. A lot of uncertainty around the length of the lags, and by the way, that's just one component.
Look at him,
of a
he's
broader
smiling over
uncertainty
there. He's got
that we face.
confidence.
So I'll tell you how I think about this. The first thing to say is we're determined to bring inflation down to 2% over time, and we will use our
He's
tools to
committed.
do that. No one should doubt that.
We
I would look
don't.
at it
We're
this way,
bulls.
though.
We don't-
The
we don't
real
doubt that,
federal
Jerome.
funds rate is now in meaningfully positive territory.
That's like
If you
your
take the
dad
nominal
telling
federal
you,
funds
"I
rate,
swear I'll
subtract the
beat you."
mainstream estimate
And you
of
go to your sister and you
near-term
go, he ain't
inflation
never touching
expectations,
us.
you
He
get a real
hasn't
federal
touched
funds
me
rate
once.
that
Has he
is
touched
well
you?
above
No, he hasn't
most
touched me.
estimates of the
Why does he
longer-term
keep
neutral rate.
threatening to beat us?
So I would say monetary
Just let him say
policy
what he
is
wants to
restrictive,
say.
more so after today's decision, meaning that it is putting downward pressure on economic activity and inflation. We'll keep monetary policy restrictive until we think it's not appropriate to do so. So that's how I think about it.
Look at
I mean,
that smile.
If I
Look at
sum
that
it up,
man.
I would say we've come a long way. we are resolutely committed to returning inflation to our 2%
Like, don't
goal
fucking
over time.
rain on my parade.
Inflation has
Stop
proved
asking
repeatedly
stupid
has proved
questions. You
stronger
guys
than we know the
remember?
forecasts
Dude, people
that
would come to that
forecasters
meeting
have
and be like,
expected.
"Oh, so you're a bull now?"
And at some point
and
that may
Jerome would like
change.
freak out and be like,
We have to
"You
be
know,
ready
we're
to
not
follow the
bulls
data.
here. We're
And
not
given
we're
how
not
far we've
doves."
come, we can afford to be a little patient as well as
Ooh,
resolute.
afford
as
to
we
be
let this unfold.
patient. Ooh.
On the credit side, I'm wondering if you saw anything in the latest SLOOS data
The
that made
Fed
you
can
think you're
afford
getting
to be
a
patient
quantum
at this
of credit
point.
contraction
He
beyond
also
what you'd
said
expect.
he is
Bank funding
open
data
to
really is
slowing.
the growth rates edging down
Slowing.
towards and below, heading below zero,
The
which is
pace
usually
of rate
a
increases.
recession indicator.
That's
so I guess
new.
The SLOOS will come out early next week, and I would just say it's broadly in
Yeah, he's
condition-
like, get fucked.
consistent with
We're
what
through-
you would expect. You've
He's
got,
forward-looking right
lending
now. He's like,
conditions
I just
tight and
ran
getting
through
a little
traffic.
tighter. You've got weak
I
demand.
came out on the
and,
other side,
it gives
and
a
you got
picture
some
of
asshole
pretty tight
asking me,
credit conditions in the economy.
or
I
telling
think
me
it's
I was a
really hard to
dumbass.
tease
I just
out
got out of
whether
traffic. I'm
how much
safe
of that
now.
is
Leave
from
me
this
alone.
source or that
I'm gonna
source,
take
but I
a
think
fucking
what
victory
matters is
lap.
The overall picture is of tight and tightening lending conditions, and that's what this SLOOS will say.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. Could you break down the reasons why inflation has fallen and what share of that credit you would give to factors that don't stem directly from rate hikes or that might be within your control at all, like easing supply chains and a drop in energy prices over the past year?
Yeah.
Rachel has a quivering voice. I think
so-
she's afraid she can't buy her first house.
Interesting question. So let me start by saying that the inflation surge that
Her
we saw
husband-
in the pandemic resulted from a collision of elevated demand and constrained supply, both of which followed from the unprecedented features of the
Hell
pandemic
yeah,
and the
Powell is
response to
goated.
fiscal and monetary policy.
Look at him. Look
And
at
we've
that
always
confidence.
expected that the disinflationary process would stem from both from the normalization of those broad pandemic-related supply and demand conditions and from
I'm reading what you guys are
restrictive
posting
monetary
right now.
policy, which would help return the balance between supply and demand by restraining
Bullish.
demand. And we think
Woo.
that's broadly what we're seeing. So to go break it down a little further, of course, headline inflation has come down sharply from elevated levels as energy and food prices have come down, mostly due to reversal of the
You
effects
guys
from the
don't
war in
want to give.
Ukraine.
You guys don't
And
want to
that's a
give.
good thing, and the public experiences that.
You
as I
guys are
mentioned
are
earlier.
savages.
For core
Like
inflation, I'd say that
Powell
also
just went
there
through
has been a role
COVID.
for
Just went
most-
through a
for
tightening
both
cycle,
factors, both
fastest in
that I
history,
mentioned.
and like he comes up to the
Clearly,
microphone and he's like,
for goods,
"All right, we're gonna
normalization
take a
supply
fucking
conditions
breather
is-
here
is
and
playing an
chill. I'm gonna
important
take a
role,
victory lap." And
as
people,
is
the reporters are
reversal,
like,
the beginning of
"Excuse
the
me, sir,
reversal of
no.
spending back into
There's no
services and
time
away
for
from
that.
goods.
We're
And
still in
take
crisis
autos as an
mode."
example, the combination of an increase in sales and inventories, while vehicle inflation has decelerated, points to a substantial role for supply.
No victory lap
But there's
for you,
also a role for
Jerome.
demand as
We need
the
more
rate
doom.
loans and things like that are more expensive. So they're both working there. Housing services inflation now starts to move down clearly.
Not
higher
the
rates
presser
have
that
slowed the
sellers
housing
are
market.
looking for in any way, shape, or form.
You know, I would say monetary
Definitely
policy
not.
is working about
Definitely
as
not
we
the
expect,
price.
and
No,
we think-
definitely not
we
the
think it'll
presser
play
they were
an
looking
important
for.
role going forward. In
Definitely
particular,
not the
non-housing services where really we
the
think
press
that's where the
release they
labor
were looking
market,
for. Press
will
release
come
was
in as a very,
neutralish,
very important factor. So we think
not
both
really
of those,
hawkish or
both of those,
dovish. The presser.
sources of disinflation are playing an important role.
Presser
And
is
just
the
to follow
tell.
up, do you think that of those two sources, that core will rely more heavily on seeing an impact
You're
from
gonna
rate hikes,
expect.
or is
You're
there
you're
a
gonna
more even split there,
expect.
too?
I think monetary policy.
You're gonna expect bears to come out and be like, "Oh, we're selling the minutes. We're definitely selling the minutes." You know they were talking nasty in the
Very
minutes.
specific pandemic things. We're seeing that with goods in particular, with supply chains and shortages moving, and we're seeing. So I think going forward, monetary policy will be important, particularly in the sector, in the non-housing services sector.
Yeah, this event vol is going to kick off, and we're going to probably run up into Friday.
Thank you, Chair Powell. First,
That's the
let me compliment your
expectation.
tie, the choice
You're
of
going to
tie.
see a run up into Friday.
So thanks for taking our question. So the beige book, it said input cost pressures remain
Look
elevated.
at him. He's
for
there. Look at him. He's
services
licking his
firms, but
fingers. He's
eased
tagging himself
notably
through
for
to the
manufacturing
page.
sector.
Like,
Is that an
he's like, "What do you
indication
guys have for
that
me? I
there's
got all the
a
answers."
wage inflation pressure.
These
And how do you
fucking guys,
target
they have
pressure
they're the
on the wage
egos of the Fed. They're
inflation
the egos of the
without
Fed.
pushing the economy into recession?
There's an article I read
As it
about the
relates
egos
to
of
goods,
Fed
it's
wanting
really an
to
indication that-
always
that supply
solve
chains
it.
and shortages
right
are
now he
easing.
looks good. He's
And so
looking
what was the
really
first
good
part of
right
it?
now. He's taking the lap.
Wage inflation, like how do you target wage inflation without pushing an economy into a recession?
I don't.
So I'm going to mute this really quick. That was the meat of it. We'll get back to it in just a second. Let's take a look at the market in general here. So I'm going to mute the book map right here. I'm going to mute this. We're going to go in a higher time frame here so you can zone out a little bit. I'm just going to make this maybe a 15-minute. So just so you can see it here. You got the cup and handle. You got the new high yesterday. You got the push up to the expected move, and you're going to expect into Friday to go up there and slam into that 459. Whether that's right now or later, I don't know, but some kind of a call up in here seems appropriate. Now, sometimes you'll get that tag of the expected move for the rest of the week, right, just to get up there as well. So keep your eye on this downside down here. I do want to point your attention to the hourly trigger right here. And normally what you'll see happen, my anticipation off of that presser would be that bears are not getting their print this week. Maybe you'll see this next week. So for right now, you're looking for the confirmation on the hourly trigger. You're waiting for this line to come up right here, this line to come up right here, and the continued move higher into tomorrow. You could get it today. You might get R2 today. But if you're going to be savvy or looking for a dip to buy, I want to show it to you in the 5-minute real quick because this is going to be the tell. So here's the 5-minute chart right here. Right now you see price stabilizing on the 6. So the price staying on the 6 means the move is still higher. If it rolls down and checks down on the 5-minute, I would be a buyer of this for a Friday move to the upside for that cup and handle. I also like the hourly trigger, so let me draw some boxes for you. Hold on here. This is a 5-minute chart. You got one right here. Green, baby. You got the hourly trigger right here. So you might get that one, you get like a liquidation moment. You end up getting that little blast down here. And then you're off and running. Now, even where we are in this yellow line right now, you need a closing red bar for this to be dead. So if you get a no closing red bar, we're going to continue higher. So no closing red bar right here. We will actually blast through all this, and we will see R2 today. So let's take a look at this. Are we watching the bar patterns here? And R2 is your next place to hit on the upside. So watch this bar. If you see a green bar here, close above, you will see then this one here, and we will race right up right there to this R2 target. So you're just watching to see how this one closes. We'll keep it on the 5-minute just to watch it, to see if we get continuation to 458.21.
It has been my view consistently that we do have a shot, and my base case is that we will be able to achieve inflation moving back down to our target without the kind of really significant downturn that results in high levels of job losses that we've seen in some past instances, many past instances of tightening that look like ours. That's been my view. That's still my view, and I think that's sort of consistent with what I see today. So, but it's a long way from assured, and we have a lot left to go to see that happen. So the staff now has a noticeable slowdown in growth starting later this year in the forecast. But given the resilience of the economy recently, they are no longer forecasting a recession. I just want to note that that our staff produces its own forecast, which is independent of the forecast that we, as FOMC participants, produce. Having an independent staff forecast, as well as the individual participant forecast, is really a strength of our process There's just a lot of, I think, constructive diversity of opinion that helps us
Bye-bye, VIX.
Informs our deliberations, helps us make, I hope, better decisions.
And is the reason for optimism that inflation has come down and you still have a strong labor market? I mean, does that add to the optimism?
I wouldn't use the term optimism about this yet. I would say, though, that there's a pathway. And yes, that's a good way to think about it. We've seen so far the beginnings of disinflation without any real costs in the labor market. And that's a really good thing.
So 1 minute chart right here.
I would just also say the historical record suggests that there's very likely to be some softening in labor market conditions. And consistent with having a soft landing, you would have some softening in labor market conditions, and that's still likely as we go forward with this process. But it's a good thing to date that we haven't really seen that. We've seen softening through not through unemployment, not through higher unemployment. We've seen softening through job openings coming down part of the way back to more normal levels. The quits rate, so people are not quitting as much. We've seen participation, people coming in.
No real talk about housing that I've heard so far. I'm interested in someone bringing up the housing question
in the labor market, which was quite overheated.
Nobody. Have you guys heard anything about the housing yet?
Back a year or so.
I haven't heard a whisper about it.
We're seeing that kind of cooling, and that's very healthy. And we hope it continues.
Jeff.
Thank you, Mr. Chairman. Jeff Cox from CNBC.com. You and other Fed officials in the past have suggested that you don't need to keep hiking until inflation hits 2%, that as long as you see continued progress. So I'm wondering, how close do you need to get with the inflation numbers coming down? How many months of data do you need to see that will give you sufficient confidence? And how far does this fight need to go before you're willing to kind of declare victory on it?
So the idea that we would keep hiking until inflation
gets to 2%
try to enter
a Friday call here.
Of going way past the target. That's clearly not the appropriate way to think about it. So. In effect, if you look at our forecasts, the median participant, and again, these are forecasting out years, so take them with a grain of salt.
Looking at 460s for Friday.
People are cutting rates next year because the federal funds rate is at a restrictive level now. So if we see inflation coming down credibly, sustainably, then we don't need to be at a restrictive level anymore. We can move back to a neutral level, and then below a neutral level at a certain point. I think we of course would be very careful about that. We'd really want to be sure that inflation is coming down in a sustainable level. And it's hard to make, I'm not going to try to make a numerical assessment of when and where that would be, but that's the way I would think about it, is you'd stop raising long before you got to 2% inflation. And you'd start cutting before you got to 2% inflation.
I grabbed some 460s for 34 cents for Friday there. They were dirt cheap, so
25 or so. So
I've got some 460s sitting there for Friday. I just bought down here.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. It's been over 4 months since a handful
Tag of the hourly trigger.
Banks,
let's take a look at it on the 30-minute chart here.
When you look at credit conditions now, given Bank of California's acquisition of PacWest, does this acquisition suggest the full impact has not been felt, or are you comfortable saying that we've seen most of the ripple effects that may have occurred at this point? And how
nice
does this play into
retracement
your
right now on the hourly trigger and the one in the 5 here. So I just grabbed some calls for Friday in here. If they try anything crazy like starting to sell this market down, if I see a 30-minute bar at any point that's red down here, the next into the close, anything like that, I will cut them loose. But otherwise, trying to buy this dip on the hourly right now.
And overall, the banking system remains strong and resilient.
Show this
of course,
better
we're
way to
still
show
watching,
this right here.
the situation carefully and monitoring, monitoring conditions in the banking sector. In terms of the actual effect on, if you think of a particular set of banks that were affected because of their size and business model and things like that, that were more affected by the turmoil in March than others, it's very hard, as I mentioned, it's very hard to sort of tease out the effects on this very large economy of ours from them tightening. They may be tightening a little bit more, probably are, than other banks. The SLOOS has been telling us for more than a year that banking conditions are tightening.
Here's S1. Here's the downside expected move at 452 right now.
I think we have to take a step back from. I can't separate those anymore. I think basically we're just looking at the overall picture, which is one of tightening credit conditions, and that's going to restrain economic activity. It is a restraining economic activity. So that's how I would look at it.
And how is that informing your outlook for setting policy?
So I think that is an expected result of tightening interest rate policy, is that bank credit conditions bank lending conditions would tighten as well. And so the question is it more effective this time because of what happened in May? I just don't think we know that. I think we're looking at the current data in GDP, and we're seeing strong spending. We're seeing a strong economy, and it's made us confident that we can go ahead and raise interest rates now for the third time since the March events. It seems like the economy is weathering this well, but of course we're watching it carefully and expect to continue to do that.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I wondered on wages if you were at all concerned about any inflationary impact of wages now outpacing inflation, which is likely contributing to the boost in consumer sentiment and the continued strength of the consumer that we've been seeing.
Well, wages in excess of inflation means real wages are positive. Again, that's a great thing. Of course, we want that. We want people to have real wages, but we want wages to be going up at a level that's consistent with 2% inflation over time. As I mentioned, nominal wages have been coming down gradually, and that's what we want to see. We expect to see more of that. That's just more of what's consistent over a longer period of time. We don't really think that wages were
My wife
an
went
important
looking
cause
for
of
a
inflation
new
in the first
position,
year or so of the
and they were
outbreak.
offering
But
less
I
money.
would say that
He's
wages
saying
are
nominal
probably an
wages are
important
coming
issue going
down.
forward. Labor market
What
conditions
my wife
broadly
was being
are going
offered to
be
get
an
a
important
new
part
position
of
at a
getting
different
inflation back down.
healthcare
And that's why
company.
we think we
They're
need some
now
further,
offering less money.
softening in labor market conditions.
That is true, or at least that's
This
what
goes
is true
sort
in
of to
our
the balance
family.
of risks question, but you mentioned at the start how you're keeping an eye on consumer activity and whether there might be some sort of a rebound there. And I'm curious what the Fed's explanation would be to families if
Yeah, I bought
further
this
interest
dip
rate
right
hikes
in
start
here.
to hit
I bought
the labor market,
right here
start
is where I
to,
bought for Friday.
Drive that sentiment back down. What's the message there of why you continue to keep rates elevated or to
I've
raise
got
them?
calls now for Friday. I've got
we have a
460
job
Cs.
assigned to us by Congress to get inflation under control, and we think the single most important thing we can do to benefit those very families, especially families at the lower end of the income spectrum, is to get inflation sustainably under control and restore price stability. We think that is the most important thing we can do now, and we're determined to do that. And I would just point out that the people who are the most hurt by inflation right away are people who are on a low fixed income, who, when you're talking about travel, or transportation costs, heating costs, clothing, food, things like that. Those, if you're just making it through each month on your paycheck and prices go up, you're in trouble right away. Even
He's
middle-class
ducking the
people have
housing
some
question right
resources
now.
and can absorb inflation. People in the lower end of the income
He's
spectrum
basically
have a
trying to
harder
tell
time
you
doing
that
that.
if
So
you're a
we need to
pleb,
get this done, and the record is clear that if we take too long, or if we don't succeed, that the pain will only be greater. So
he's kind of saying you can kiss off and trying to buy a new house or being able to bust your way into the house buying market.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You had said last month that this meeting this week was going to be a live one. In the event the market had assigned a roughly 99% probability to the rate move that you announced today, the decision was, of course, unanimous. And the statement was basically unchanged from last month. So may I ask, to what extent was the meeting actually a live one? Was there ever any doubt over the past 2 days about what the decision was actually going to be?
Well, was there doubt? Look, I would say there's a range of views on the committee, and when you see the minutes in 3 weeks, you'll see that. There's a range of views about what we should do at this meeting and what we should do at the next meeting, and
He's talking about the minutes right now.
Many times when we go into a meeting, the decision is not, fundamentally in doubt. Nonetheless, we have the meeting, and
we were discussing this earlier, what the minutes actually mean.
Some meetings are less uncertain than others, and I'll just leave it at that.
You see him smiling right now? That reporter is like, damn
Evan
you.
Weiser, Market News International. Thank you, Chair Powell. Financial conditions have been loosening at a fairly steady clip in recent weeks, the dollar, the stock market, et cetera. What does that mean for the Fed in being sure that inflation will come down to target?
So
also,
we
no
monitor,
discussion about the price of the stock market right now either. No questions about where the stock market is. No, like the housing. I noticed he hasn't been speaking about. And he hasn't been. No one's been asking about housing specifically. They're talking about credit tightening, but
through financial conditions to get inflation under control.
They're not really talking about the price of the stock market anyway. Like, hey, why is the stock market so high? Any of that kind of stuff.
That could mean that if financial conditions get looser, we have to do more. But what tends to happen, though, is financial conditions get in and out of alignment with what we're doing, and ultimately, over time, we get where we need to go.
If I could also ask about the SEP from June that showed rate cuts.
Yeah, I don't think you're getting paid.
Do you expect the Fed to cut nominal rates next year while also continuing QT?
You might get the expected move to the downside. You might get this, but my thought here is you're not going to get it.
A world where things are okay.
I think they're going to put the pain trade on you into Friday.
From what are restrictive levels to more normal levels.
It's possible that you get it. If they do, Bazzer, if they do bring it down here, man, I would be out.
To continue it, you depending on where you are in the cycle. So they're two independent things, and really the active tool of monetary policy is rates. But you can imagine circumstances in which it would be appropriate.
It happens.
To
it's rare, though, brother. It's rare, my man. You might get it.
Just different ways, but that wouldn't be the case.
Let's go to Kyle.
Thanks, Chair Powell. Kyle Campbell with American Banker. I have a question about the discount window. I'm wondering if since the bank failures of the spring, if you've seen
you do
signs
have a
that banks are taking more
bear
steps to be
plane here forming, not it's not confirmed yet. You do have a bear plane right here, brother.
Need to. And if you have any sort of thoughts on whether policies might be appropriate for making sure that banks sort of test regularly to show that they are prepared to use it. Thanks.
So that's a very important thing, yes, and yes to both sides of that. Yes, banks are now working to see that they are ready to use the discount window, and we are strongly encouraging them to do that, banks broadly. We did find, as
this
you know,
is your this is your spot, bro. If you have like a spot that you want to defend, it's right here.
That it's a little clunkier. It can be a little clunkier and not as quick as it needs to be sometimes. So why not be in a situation where you're just much more
I don't
ready
think you're getting it, Chase. I'm not on camp paying. They're gonna need fuel, man. They're going to need to trap all those fucking puts to pay it. If they can't, I don't know.
Mr. Chairman, Mark Hamrick with Bankrate. You've talked in the past about getting the housing market back into better balance, excuse me, and also that the market might have bottomed.
Give you 3 to 5% down, you'll be happy. I think all bulls agree with you, Chase. I think all bulls want that fucking pullback, man. They want that 440 really bad.
At a time when existing homeowners are reluctant to move.
I got some friends, man, that I'm talking to, and they're like, I have friends that have sold the market at this point. They sold it 5-6 days ago.
Industry
and they just want that buyback.
Closer to balance or farther away?
They want to go back in with size. I got a fucking friend that wants to put $1 million in the market and wants to go to 440.
For the reasons that you talked about with existing homes,
fucking pissed.
There are many people who have low rate mortgages and whereas they might want to sell in a normal situation, they're not going to because they have so much value in their mortgage.
Yeah, they're going to get squeezed out here. So I don't see any bad news in this presser so far. The only two things that are bothering me,
there's a lot of supply coming
from like my Main Street hat is no discussion about housing.
Are first-time buyers.
That's a big one for me.
And then
the other one would be
relatively elevated mortgage rates, but I think this will take some time to work through. Hopefully more supply comes online, and we work through it. We're still living through the the aftermath of the pandemic.
We'll go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Russia has pulled out of an agreement allowing shipments
You might get the tag down here, man. You might get the expected move, brother.
Alternative routes
might
at this point
just get
could be
it.
closed off. Just wondering how could that contribute to higher food prices?
You got a
and
three
inflation
trigger bear
generally, and how
cluster up here
closely are you
forming
watching that?
on SPY
Yeah,
right
we're
now, the
watching it,
1
of
minute
course, very
trigger at
closely.
least.
And you're right, the withdrawal from the Black Sea Grain Initiative does raise concerns about global food security, particularly for poorer countries that import a large share of their food.
5 minute
Grain
has
prices
more
did go
time to
up
come down
on this
right now.
news,
You've
but
got
they
the
remain
hourly
well
on
below
your
their
side
peaks
right
of
now. You
last
might get the
spring.
expected move in
And
the
moves that we've
downside.
seen so far, I would say, are not expected to make a significant contribution to U.S. inflation. Of course, we will be watching that situation carefully.
So you don't think it would have a big effect on Fed policy at this point?
You wouldn't say so looking at what we know now.
Thank you.
Thanks very much.
I tried to grab the end of that and I couldn't grab it. I tried to add some more right there. I just tried to add some more fucking calls on the end of that interview, and they wouldn't let me grab them. I tried to grab 20 cents. They gave me 22 for another 10-pack. I just keep building the position here at 460C for Friday. Bears needed that presser to stay a little bit longer than they were expecting here. Bears' last hope. A reversal of some kind to the downside to the expected move at 451.87. Presser is now over. Let me know what you think in the chat. I'll read the chat right now. Let me know what you think. Do you think that press release was hawkish or bullish? Do you think that the presser was hawkish or bullish? There were 2 points that I didn't get answered that kind of bothered me. One was housing. And there was another one, I forget what it was right now, but there's one other thing that he didn't address that kind of pissed me off. Do you see us going down into Friday? Do you think we hit 460 on the cup and handle extension into Friday? Do you think we trade down and reject here on the hourly trigger? Let me show it to you somewhere else. Hold on here. I'll show it to you somewhere else here. Hold on. No closing 30-minute candle. You need a closing red candle below the green, white, and red. So you need a 30-minute closing candle for continued downside. So you need a candle that actually closes below here. Has not happened yet. You do have some velocity on your side on the hourly here. You can see this, some indecision here. So if you're a bear on the 30-minute at least, you don't have this yet. This one right here is not what you think it is. This one here is saying it's going up, believe it or not. This is actually more important than the hourly. That is not a 1 minute or a 5 minute. That's a completely different indicator. So right now, we'll see what happens here, how this resolves itself. You've got to turn up on the green right here. So 30-minute, still indecisive on the 30-minute to the upside. The 1 minute is where you have a little bit of luck possibly here, possibly, if you're a bear. A little bit of hope to downside move. You've got the 3-trigger cluster right here. You got a little bit of a roll right here. You can see in the hourly. You've got a little bit of a rejection right here. Here's one. Whoop. There's one down right there. You're looking for that second one to make your way down. What you don't want to do if you're a bear is see price get above 454.60. If price begins to break above and confirm the leg higher, the trade is dead for you. So right in here, I want you to pay attention to how this works itself out. You want to see a rejection here. You do not want to see price break above anything like this. You'll see this one right here. You'll see that one right there. And you'll begin to see a leg higher into Friday's action here. There is some, if you're looking at this right now, the 1 minute actually starting to come onto the bull side. Not quite. You want to see the red down here, and you want to see the green down here for the bulls to have a big move to the upside. So the expectation right now is going to be, just right now what it's saying is something like this into the close and then continuation later on for the bulls. Let me know in the chat. I'll read the chat right now. Let me scroll through here. I gotta look right. Dovish Presser. Talking housing. I heard a little bit of housing, but not much. I heard a little bit about the credit crunch, but I didn't hear anything specifically about, like people are poor people are getting fucked or young people are getting fucked. He did that the last presser or two. You gonna print your 450 puts? No, I don't think they are. MTKs, blah blah blah. Angry Kate's left at the Angry Kate's left the presser. It's going to be another week or 2, 3 of inconsistent chop, please. Good God, no. Yeah, I don't think you're getting a downside move. Maybe Meta will help you out. Meta reporting after close, 200% move on nobody's still using Facebook. Okay. Bring back the big drops on Meta. I will chart Meta for you right now. We've got a half an hour left. I'll chart Meta, Hood, and was there something else? I thought that I would. We can afford to be patient. That's the key. Dovish. Yeah, I agree with that statement too. I think it was very dovish. I could have seen F2 if it kept going down, but now I'm pretty doubtful. Yeah, I think they're going to put the pain trade on, to be honest with you. I think the pain trade is coming. He did talk about new home buyers, Winky said. So what did he say, Wink? Did I miss that part of what he was talking about? Can you guys give me a quick update on what he said, or maybe I'll watch it later tonight? Winky's making a statement now. He said, if Meta says anything positive about Threads, your ass is going to be blown out on shorts. Can I chart McDonald's? Yeah, earnings are coming in 2 days, right? No, I already did Google, man. Google hit every target. So I want you guys all to know that I'm not going over that again. You can go to yesterday's video. I gave you the targets. We hit every target on all three. All three we hit. Basically. I mean, the one that was close, not exact, was Snap. We hit 13 something, not full 15. Went right back down and slapped 10. The only thing I want to know about that chart is you're going to take the money on 10 and wait to see if you get a free trade up to 15 in the next couple weeks. Because that trade was for, I believe, 2 weeks from now, I believe, something like that. So we've hit everything. Oh, I charted that out for you. There's no fucking, we're not doing like, I'll tell you something we're not going to do here. There ain't no fucking way I'm going to spend the time telling you where it's going, have it all go there, and then you come back and say, I want to enter now. We ain't doing that shit. You can watch that. You can watch yesterday's video. Sorry, I'm not trying to be a dick or anything, but we don't do the 2020 back vision, that stuff. If you didn't put the risk on all three of those, I don't know what to say to you. They should have all printed at this point. You should have a free trade right now on the third one on Snap. Yeah, I might have to add more here. Hold on, I'm going to try to buy some more here. Hold on a second here. I'm loading up on these fucking 460 calls, so I want to see 460 by Friday on SPY. Threads is like being on the internet in the 1990s before ads hit. Yeah, I did notice that. Winky. That's a good insight. I will give Threads that one thing. It's very clean right now. There's not a lot of bloat everywhere yet, is there? I'll give you that. I agree with that fucking 100%. 100 fucking percent, man. Like that sweet phase, right? There's that sweet, like,